that counter was looking not very attractive to us, but we found it a decent counter to invest the funds in. Now, what we believe was the major attraction of this counter is that the way this merchant banking space has been grown, and the company has grown at a very fast pace of a CAGR of, I suppose, more than, if I remember it correctly, it was a CAGR of more than 20%, which they have posted in their top line as well as bottom line. So that growth was looking very attractive to us. But what we have seen over the last few months, that the way the capital market was like, they are in a volatile move. So similarly is what we are seeing. In fact, there were some dry months. If I say about the February or March, they were completely dry regarding the new offers, new IPOs, etc. So that is a significant impact on the business of this company, and that's why we have seen it falling below the issue price. But my belief is that this is a counter to remain invested in for the longer term perspective, because we believe longer term story for the Indian financial markets will be very strong, and hence the capital market being the beneficiary, and especially the primary market, definitely this company will going to benefit. So right now, stay invested in this counter, and I think wait for at least 3 to 6 months. Definitely, it will show some good moves.
Okay, so stay invested is the view that we are seeing for DAM Capital Advisors. So do keep this one on your radar. But the next question is from Manoj from Hyderabad. And now this is an interesting query that we are watching out for, considering that the stock has had a recent news flow. This is Hindustan Copper that we are talking about, 2,000 shares at the price of 224. Currently sitting at a profit of 77,000. Wants to understand whether he should continue to hold or sell this one. Swati, let me come to you for Hindustan Copper.
Yes, my view is definitely positive, because this counter is trading in the formations of the high tops, high bottom formations, and believe it has a very strong potential to reach up to 280 to 290 levels. I will suggest to hold on by keeping a strict profit stop loss of 255 levels. Those are the previous swing supports levels. So as long as this holds that level, the view will remain a positive. So I will suggest to hold the long positions for a target of 285 to 290 with a profit stop loss of a 255 rupees.
Okay, all right. So that's the view on Hind Copper. Watch out for the underlying price of copper as well. That's something to pay attention to, especially given the tariffs that have been announced by Donald Trump on copper imports into the US. But by the way, the company has come out and said that it has no implication on it and its business. Crompton is the next counter that we're talking about, and Venkat Koneni, who's writing in from Andhra Pradesh, has got this question. He's got 5,000 shares at a price of 346.9, and he's looking for the next 3 to 6 months and what the prospects are. This forms only about 2.5% of his overall portfolio, so not a lot of concentration either. Swati, what is the potential upside, and where would you put the stop loss?
See, Crompton, as of now, it is under the consolidation phase. If we look towards the weekly chart from the last 10 to 15 weeks, we are witnessing that the stock is consolidating within the range of 320 to 460 levels. Within that 40 points, there is a momentum is going on. Once it manages to give a breakout of 360 levels, then we can witness the uptrend rally, which might take a counter towards to 400 and 420 levels. So the as of now view is definitely positive. We are waiting for a consolidation breakout, but downside, it might come down towards to 325 and so levels. If you're looking for a longer term duration, at least minimum 6 months to 1 year actually, then you can definitely hold on. It has a strong potential to reach up to 400 levels. So I will suggest to hold on your long positions for a target of 390 to 400 levels.
Okay, so the long-term outlook on this one remains positive, while down in the next near term or so, there might be some pressure with the levels of 325 on your watch out. So that's the view for Crompton that we are seeing. But the next counter in focus is L&T, and this is Vimal Anand from Mysore writing to us. He's holding about 20 shares of L&T, and he bought this at 2 months back. While if you are looking in the last 1 year period or even the last few months, the stock has remained majorly range bound. Want to understand Swati's view on this counter, considering the overall capex play that we are seeing from the public and the government side, and L&T has reported strong set of numbers in the last few quarters. What's your analysis here?
See, for a short-term view, definitely the selling pressure has been witnessed and it's likely to be continued. If we look towards the daily chart, the stock has shown a negative divergence from the overbought zone, and it's continuously facing selling pressures, and it has given the breakdown of the short-term moving average. We can say that at 20 DMA as well. I believe the stock is likely to be continued this fall towards to 3440, 3400 levels. Up to that level, we can witness the sell-off, and from there onwards, we can witness some sort of a reversals. But longer term duration, this is the one counters definitely will participate into the rally, which might take a nifty on the towards the new all-time high. So you should definitely hold on the long positions. If possible, if the counter comes nearby 3400 levels, try to average it out so that your buying price will come down. I'm looking for a target of 3700, and beyond that level, 3800 levels can be seen. So it's a hold from my side.
Okay, all right. So that's a view on Larsen and Toubro. The next counter that we're talking about is on UNIMC. UNIMC Aerospace and Manufacturing. UNIMC is the name of the counter. It is a 6,360 crore market capitalization company trading at 1,250. Not seemingly the most liquid counter, but we've got Lalita from Kerala, who's bought 109 shares at a price of 1,460. The stock is currently, as I pointed out, trading at 1,240 thereabouts. Wondering whether to hold or sell or average at this price point. Asta, on the fundamentals, do you have coverage? And if so, what is the advice?
Yes, we do cover this counter. Now, this counter is looking very strong to us. In fact, if you see, the management has given the guidance of rupees 10 billion by FY29 in the revenue, if I talk about. And in fact, their air tooling segment is working very, very strongly. And I think it is expected to grow at a 35% growth rate in the coming years. So I think this counter has a very strong potential to move upwards from here. And yes, we are positive on this counter. I think one can remain invested in this counter, and as well as, buy at the lower level is also one of the strategy which one can apply to this counter. In both the ways, we are positive on this counter with a price target of around 1500 to 1700 in the medium to long term.
Okay, so positive stance on UNIMC is what we are seeing. Now, the next question is from Shashi Kumar from Bengaluru. He's asking us about Spandana Sphoorty Financial Holding. Currently holds about 190 shares, and this is at a price of 394 that we are looking at. Currently, the stock is buzzing in trade today, up over 7%, but still down from where he bought it at those levels, facing a loss of 15,000 on the counter. Swati, let me come to you on this one. What's your outlook here?
The outlook is definitely positive at the current market price, because from the year of 2024, we have seen a drastic sell-off, which took a counter from 1300 levels to almost 200 level. Now it is trading in the oversold zone if you look towards the monthly chart, and strong reversal signs can be witnessed in the near-term future. No need to book your losses at the current market price because the downside is limited. I believe that in this month, we have seen a very good kind of a returns of almost 13%. The volumes are slowly and steadily are increasing along with the price momentum. So technical setup is positive. Near-term future, 350, 370 levels can be seen very soon. So you can definitely hold on the long positions in this particular stock.
Hold is a view on Spandana Sphoorty. The next question is from Vadodara, and Kaushik Bhai is writing in, asking about whether Siemens India can be bought at the current market price. If I remember correctly, there's a recent order win as well for Siemens. So can we pull up the 1 week chart to see what it's done? 700 plus crore order came through. Hey, Anushi, you track the space. Didn't they win an order?
Yeah, Siemens Energy, now it did win an order like a couple of weeks ago, if I'm not wrong. Over
Siemens Energy, so this is Siemens India though.
Okay.
So it's a different company. Okay, after the split happened not too long back, right? So, but Asta, the question is on Siemens India. Would you suggest that it's a good buy at the current market price, or do you think that valuations are unattractive?
No, I think one can accumulate this counter at the lower level. So we are positive on this counter. And as we are seeing that the stock is showing some sort of pressure, so we believe that buying at the lower level of around 3,080 to 3,100 is a good choice with a price target of 3,400 now. In fact, what we believe that the management is very much positive, especially in their mobility space. And this segment is really working well for them. And we are expecting some of the segments like infra and mobility segment to have a very, very strong growth going ahead. So I think although what we have seen that the past performance was not that very strong on that basis, the stock prices have seen some sort of a pressure. But going ahead, we are positive on this counter with the price target of 3,400. So yes, one can accumulate this counter at the lower level of around 3,080 to 3,100.
Okay, so that's the view that we are seeing for Siemens India in focus over here. Now, the next question is from Sunil Suryavanshi. He's writing us from Mumbai and wants to understand the outlook for Yes Bank. Holds about 500 shares at this, and he bought this at a price of 24, so currently facing a loss on this counter. Swati, what is your technical outlook on this stock?
Yes, overall, on the PSU sector, definitely my view is positive. And yes, bank, we have already seen a lot of selling pressure and is currently trading in a downward or say the support level. So I will suggest to hold on this particular counter because downside is limited. A maximum, it may fall down towards to 19 to 18 levels, but upside is huge. 24, 20, 26 levels can be seen in the near term future. So definitely one can hold the long positions in the Axis Bank for a target of 24 to 26 levels.
Okay, all right. Our first caller of the day, Dheeraj, is calling us from Hyderabad. Dheeraj, very good morning to you. How can we help you today? Dheeraj, can you hear me? Dheeraj, I'll try one last time. Dheeraj, can you hear me? Okay, we've lost Dheeraj on the line. All right. The next caller, Joseph, not caller rather, somebody's messaged us from Chennai, Joseph Gerard, and asking about Power Finance Corporation of India, bought at 495 rupees per share, and he's wondering whether to hold it. So he's actually held when it's gone through its spike and actually come down from that point. His quantity is 200 and he's wondering whether he can hold for another month. So Swati, there's a lot that can be said about the fundamental, but since this is a relatively short-term question, I have to come back to you on the charts. What's the view?
No wonder we have seen a lot of selling pressure in this particular stock in the past year as such. But 2025 has been witnessed a very strong consolidation phase for this particular stock. Now it's on the verge of giving the breakout of a 340 levels on intraday basis. Many of time we have seen a spike towards to 440 levels, but somehow it has failed to give the breakout. But looking towards the momentum, the RSI is also suggest upward rising strength in this particular stock. So slowly and steadily we will get a momentum, but downside is really very limited. I will suggest to hold on this particular counter. If the stock gives the breakout of a 435 levels, try to add on the long positions so that your average levels will come down. And in the near term future, 475 to 480 levels we can see. So you can definitely hold on this particular stock for a longer term duration.
Okay, all right. We have to step into a very quick break. Do stay with us, Asta and Swati. We'll be back on the other side to take more questions. Viewers, do stay tuned. And we've also got a conversation lined up to tell you about the latest Tesla introduction in India. Stay tuned.
That's huge. That is a biggie. It's out of it.
गोल्ड प्लस क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Welcome back. You're watching Ask Profit, and well, we're in the midst of taking all of your questions on WhatsApp and otherwise. And the next question we're taking is on Arti Industries, where Sai Babu from Vijayawada has bought at levels of 720. He's got 200 shares, and he's wondering, for the long term, should he hold or should he exit? And so, Asta, the question is to you on the fundamentals. Would you hold Arti Industries?
I think one can hold, but the major problem is with the realizations, because what we have seen was there was a volume growth, but the realizations got impacted, and that is the major reason that we have seen the stock not performing so strongly. But going ahead, we believe that we can see some sort of an improvement in that segment or that part also, and hence, and as the result season is already on, so let's wait till the results arrive and then make a decision of regarding holding or exiting. So right now, my idea here is to stay invested in this counter. And again, you review the query when results come.
Got it. All right. Our first caller effectively of the day is from Bengaluru. Murli is calling us. Murli, very good morning to you. How can we help you today?
Very good morning, Mr. Alex. My wishes to panels also.
Okay.
My question is on Oswal pumps, a recent listing of June.
Yes.
Which has shown slightly lower profit this quarter.
Right.
But considering the future prospects, and it is a dominant player in PM Kusum scheme, and their OPM has gone up to 30%, and their management is sounding so confident for the upcoming year. I mean, current financial year and future onwards.
Yes.
I thought it's a good buy from a long-term point of view, as it has come down 10% from its peak, and above the issue price of 614.
Right.
What is the opinion of the experts? I am willing to wait for 2 years.
Wait for 2 years. Okay. So, Asta, the question is on the fundamentals therefore. So, would you say you should hold on to Oswal pumps, deploy more at this point, or just hold?
So, if I talk about the IPO also, we have recommended a discounter. It is one of the major manufacturers of solar pumps. And what was fascinating about this counter at the time of the IPO?
I think we've just about had an issue with Asta's feed, unfortunately. We'll circle back, Murli, to... Okay, so if you're back, Asta, what were you saying about Oswal pumps?
Am I audible now?
Yes, you are.
So when the time IPO came, we were very much optimistic about the counter, because the major fascinating point about this IPO was its valuation. It came at a 24 price to earning valuation. So what we believe that there is a much potential for this counter to move ahead, because this counter has shown a very strong CAGR growth of around 45% in the top line from FY22 to 24. So I think all these factors are looking very strong to us, and I think this counter has a potential to move till the level of 800. So yes, one can stay invested in this counter, and buy at the lower level is also preferable, not at the current level, maybe at around 670 or 665 odd level. One can make a fresh entry also for the ultimate target of 750 to 800.
Okay, very optimistic view is what we are seeing for Oswal pumps at the levels of 800, the target being. So that's the view that we are seeing for this counter. But we have another caller joining us, and this is Paramjeet calling us from Himachal Pradesh. Hi Paramjeet, how can we help you on the show today?
Morning, ma'am. I'm having 10,000 shares of Mahindra Lifespace.
Right. So
at the rate of 298.
That's a significant of an upside that you're seeing, Paramjit. Just want to understand your reasoning behind entering in this counter.
I'm tracking the stock from the last 3-4 years and bought it before right issue.
Okay. So you want to continue to hold on to it and understand the long-term picture, I'm assuming?
2 to 3 years.
Okay, 2 to 3 years is the timeline that we are seeing for. Let me go to Astha for this one. Astha, a significant kind of an upside that Paramjit is already seeing on this counter. Just want to understand your overall view on the stock.
So in the reality space, what is the major concerning about this counter? Although this is up to date, but their financial results for the Q4 of FY20 were not that very great. So what we have seen, the bottom line was not showing very much positive figures, and that is why we are not very much optimistic on this reality space counter in the short term. But here, as the investor has an idea of a longer term view. So I think there is no harm in keeping it in the portfolio because, in fact, if I talk about 2-3 months earlier, in fact, the pre-sales number were also very strong. So we really need to see how this company going to pan out in the coming quarters. So here, only for the long term, if anyone want to keep this counter in the portfolio, then it is advisable. Price target can be set at around 400 odd levels in the initial junction.
All right, so hold is a view on Mahindra Life. Hopefully that answers your question. Our next question is on IDFC First Bank, which Kalyan Chakravarti from Visakhapatnam has bought at levels of 73.65. And he's wondering whether to hold or exit at this point. Swati, on the charts, what's the view?
I'm a bit cautious on this particular stock because we have already seen a rally from almost 60 to 78 levels. So profit booking cannot be denied at the higher levels. It might come down towards to 70 and debt levels, and then we can witness some sort of a reversals. So at the current market price, you can hold on by keeping a strict stop loss of 70 rupees on a downside. Upside momentum rally can be seen once it manages to give the breakout of a 75 levels, which are the resistance provided by short-term moving averages by 20 DMA. So if it's break that level, then again we can see a rally higher side, which will take a counters to us to 80 levels. So it's a hold from my end with a strict stop loss of 70 rupees on a downside.
All right, let's take the next caller. Shailaja is calling us from Hyderabad. Shailaja, very good morning to you. How can we help you today?
Yeah, morning Alex and morning to everyone. I want to know regarding HFCL, Himachal Futuristic Communication Limited.
Right.
I do hold shares of 125 shares at price of 85 rupees.
Okay.
So I want to know regarding this whether I can average it or not. Today it's around 82. I need a technical analysis.
Got it. I understood. And what is the time frame that you intend to hold for, Shailaja?
It's a span of 2 to 3 months.
2 to 3 months. All right. Swati, on the charts, therefore, 85 is a buy price, 82.5 is the current market price. Would you hold for 2 to 3 months? Would you average the cost price at this point?
Definitely view is positive, not to average it at current market price because it will not majorly affect your buying price. I will suggest to hold on to long positions. It has a very strong potential to reach up to 92 to 93 levels. If you want to add on a downside, 78, 77 levels are the very good support levels, which is acting as a cluster resistor supports levels of a past. So not to add at the current market price. If the counter fall down towards to 77, 78 levels, then only you can add on. Short-term bidder of a target lies at around 93 will be the immediate target. Beyond that, 98 levels can be seen. So it's a hold from my end.
Okay, so hold is what we are seeing for HFCL. Next, we have a caller joining us, and this is Prashant Joshi calling us from Gwalior. Hi, Prashant. Yeah. Please state your query. Hi, Prashant. Hope you can hear us. Okay, I think that we've lost the caller there, Alex.
Okay, yeah, all right. So we can circle back to Prashant at some point. I understand we're joined now by Hormuz Surabji, who is editor Autocar India and one of my favorite people to speak to about everything that's happening in the automotive space. Hormuz, very good morning. Alex here. I want to know what your initial reaction to this Tesla introduction is, because it's been the buzz for quite a while and they were angling for a few advantages which don't seem to have come through, and so they've brought a completely built unit at a Model Y into India.
Yeah, I mean, I think, as we've seen, there's a sort of unprecedented frenzy around Tesla. understandably so. I mean, this isn't just it's a car brand. It's quite a phenomenon, given Elon Musk, his vision, first mover advantage and all that. But we have to see if, the sales really live up to the hype. Now, they've launched the Model Y as a CBU. I mean, that was expected. Frankly, we didn't expect them to, come running in here with manufacturing. It's not easy. You need to build a whole supplier ecosystem. Entry barriers are very, very high to get into full-scale manufacturing over here. So sensible strategy to come in with a CBU. And also the Model Y is the most appropriate car for the Indian market. They initially planned the Model 3, but clearly that wasn't suitable, especially from a ground clearance perspective. This one is much better. And I think, obviously Tesla has got a certain pull. It's really the rock star of the EV world still, despite all the challenges it has. And, I think we will see an initial, there'll be a lot of takers initially.
Interesting. So I'm just wondering, so 70% customs, as I understand it, because it's a completely built unit and that particular model is going to be charged that. Effectively, depending on how you think about it, Hormuz, it's the price to pay, or if you're feeling particularly generous and you but contribute a significant amount of money to the exchequer. What do you think about that? And because it is an electric vehicle, I'm just wondering whether there's a significant difference in technology between that and something that an Indian manufacturer is making.
So I think, firstly, the prices are sort of out. We've seen they're about 60 lakhs ex-showroom for the short range and 69 for the long range. I mean, again, so obviously they're going to be niche volumes over here. There's an affordability issue and people spending so much on EVs also. We've seen, I'm seeing comparable products, whether it's from BMW or Mercedes, looking at what they sell, they're selling about 300 EVs a month total at that price range. So you can see that the volumes are very small. Even let's, give Tesla the benefit that, just by the pull of its brand, it will sell a little more. But I think tops, you're not looking at more than 4,000 vehicles a year. That's my estimate. So I think clearly very niche volumes. And I think, it's the same for everyone in a CBU. Obviously, you are paying a heavy customs duty as an import. But don't forget that the benefit you get is of 5% GST and no registration tax in certain states as well. So there are benefits as well. But I think the key thing will be to see if the game changer for Tesla could be if it builds its own proprietary supercharging network. That I think is one thing that could really, give them an advantage. We haven't heard plans for that. Again, something that's not easy to do in India. And I think, Tesla, compared to others, does have certain strengths, whether it's in software or the battery efficiency, performance. But again, it also has some downsides, fit and finish, not as comparable as to some of the other established brands. So I think right now, a lot is riding on the Tesla name, and we'll have to see how the car performs in the Indian market.
Yeah, a couple of more questions from my end. So therefore, you've answered the question on technology as well. I'm just wondering whether a potential buyer should be concerned at all about after sales. And of course, the price point that we're talking about, Hormuz, this is, these are people that can afford the kind of money that you would have to spend on after sales, but availability is something that you have to bear in mind as well. Is that something to worry about?
Yeah, I think after sales, definitely you have to worry about. I think, look, for normal maintenance, it's not much of a worry. And I think one thing about Tesla, where they have an edge over the others, is in software and OTA. So, so I think that's where the car can just be updated, kept fresh without even having to go to a service network. But, if there's some mechanical problem or even an accident, repairing that could be a challenge in the absence of a well-established network. And again, with CBUs, that's always a problem because stocking some of the parts is not always easy. They'll have to be imported. So these are some of the challenges people could face. But, I know of many owners who brought in Teslas sort of via the grey market. They've been pretty happy with them. Some of them have had issues, but I think really Tesla kind of delivers a different kind of experience, no doubt.
Okay, so that last point on the charging network, and incidentally, Hormuz, I know somebody who has driven an Ioniq from Bengaluru to Mumbai to Rajasthan to Delhi and back to Bengaluru. So it's possible to do in the Indian scenario if you plan it well in advance, but that fast charging network, there is no word yet. Do you think that one, it can be set up, and two, how much time that would take?
I think it'll be a challenge. One, India is a big country. You can invest in the fast charging network, but you have to have the power to support that, again, which is not easy, especially from the discoms. So, excuse me. So I think that is going to be a challenge. I think, India, basically, we have a network of 60 kilowatt chargers, tops, very, very few going more than that. So it's a bit difficult to set up really super fast chargers, so I think that is going to be a bit of a challenge. But I think, EVs are generally very urban centric. And, if you have a home charger, which I'm sure many of the owners will have, I think that issue, it won't be so much of an issue. I don't think people are going to be going really long distances in their EVs. So I think, as being an urban phenomenon, I think, that it won't be so much of an issue. But again, as I said, that could be a differentiator. It gives you that extra peace of mind knowing that you have a dedicated charging network.
Fantastic. Always a pleasure, Horma, speaking with you. Thanks so much for joining in.
Thanks, Alex.
All right. Let's go back to the questions that we have. And sorry to keep you waiting. Let me take the next question. Riddhi Jain is writing in from Pune and asking about BHEL. She's bought at a price of 230 rupees per share. And 500 shares is what she's got. And she's asking a simple question. Should she hold? Swati, what is the potential upside on the charts? And would you hold at this point?
Yes, I would like to hold the long positions at the CMP. Downside, it has a very crucial support at around 245 to 250 levels. So by keeping that as your stop loss, you can hold on the long positions. Upside, 270 to 80 levels can be seen in the near-term future. So the view is positive. You can hold on to your long positions.
Okay, Swati, I'll stay with you for the next one as well. Now, Kusum from Pune is writing to us about Mankind Pharma. She wants to understand the technical outlook on this one for the next 6 months or so. So what's your view over here?
Definitely positive. Why so? Because the weekly chart indicates that the stock high is in the formations of the W-shaped pattern and it's on the verge of the rallying the CD leg of that patterns. For a 6 months point of view, initial targets will be at 2800 for the near-term future, but up to 3000 levels, this counter can continue its rally. Downside, it has a very good support formations nearby 2500 levels. So as long as it holds those levels, the target will remain intact for the 3000 levels for the 3 to 6 months. So you can definitely hold on to long positions.
The long positions is a view on Mankind Pharma. The stock is up about 1.8%, but it has had quite a bit of a chop and churn over that time frame of 6 months. Major BV Nayak has got the next a question. He says that he's a retired army officer. 600 shares of Ashok Leyland is what he's got at a price of 106 rupees per share. He's wondering whether to add more at the current market price of 249 or 250 or thereabouts for the long term. Asta, what's the view?
Regarding this counter, I think one can add, but at the lower level. In fact, today what we are seeing is that the auto sector is in a good form today. So yes, this counter is looking good to us, but not at the present moment of the time, because what we believe, yes, they have got a market share position and in fact, market leadership position, I beg your pardon. And in fact, the new product launches is looking very strong to us. And in fact, their margin outlook is looking very, very strong to us. But what we believe that we really want to see in their quarterly numbers going ahead. So right now we believe that this stock can fall till the level of 240 or 235. So those are the good levels to make a fresh entry into it with a price target of around 280 to 290. So buy, but at the lower levels.
Incidentally, Tej Reddy from Ireland says that he's a regular viewer of the show, and he's also got a question on Ashok Leyland. Tej, I hope that answers your question.
Right, so that's the view that we are seeing for Ashok Leyland, and those are the levels that we should be watching out for. Thanks for that, Astha. But the next question is from Shiva, who's writing us from Hyderabad, and he wants to understand the overall outlook on Globe Civil Projects. Now, do note that this is a recent listing that we are looking at. He's currently facing a loss of 9,000 on this counter. Swati, what's your view over here?
See, as of now, this particular stock, we don't have that much chart as such, but looking towards whatever the data we have, currently the counter is facing a resistance of 84 to 85 levels. If it clears that levels, then we might witness the more upside momentum, which might take a counter towards to 95. I will suggest to hold on looking towards the momentum price. Downside, it has a very good support at around 78 to 80 levels. So keeping that as your stop loss, you can hold on the long position.
That's a quick view on the fundamentals of Globe Civil Projects if you've got coverage of the stock.
Yes, we did cover it in the IPO at a price of around 71. So yes, the valuation was good, but the major problem is that most of their projects were from the government side, and that was the major issue which we find is that that's why this stock has not hold that much of a premium on the listing because of the dependency on the government projects. But overall, the valuations were decent, so we believe that this stock has a potential to move more upside from here. Stay invested in this counter with a price target of around 90 to 95.
Okay. All right. SJVN is the name of the counter we're talking about next. A 6-month time frame is being looked at by Balaji from Chennai, and he's bought at levels of 133 rupees per share. He's wondering whether to hold or book a loss because the stock is currently trading below his buy price at 98 rupees per share. Swati, on the charts, what's the view?
View for a short-term period of time is a bit cautious, but longer-term period, it's definitely positive. You can buy at the current market price because already we have seen a strong correction in this particular stock, and the momentum indicators such as RSI showing a positive crossovers from the oversold zone. So which indicates that the downside is limited. If you're getting any dips towards 95, 94 levels, you can add on the long positions. Upside momentum rally can be seen when it manages to give the breakout of 100 levels on the high side. Then upper side, the target gets open for 110 to 115 levels. So those are the targets we are looking in the near term future. So it's all from my end.
Okay, so that's the view that we are seeing for SJVN. But the next question is from Kshitij Jain, and his question is about Bombay Burmah Trading Company. His average price over here is at 2,300 and he's looking to exit this counter. Swati, is that the view that you would hold for this one?
Definitely, I would like to hold this particular stock because the really volumes and the price are going in hand in hand. The structure is definitely positive. Upside, the initial targets will be at 2,050 and beyond that level, 2,100 levels can be seen. So you can hold on this particular stock as long as it's hold 1,850 levels, which is acting as a crucial support level. So you can hold on the long positions with a mentioned stop loss.
Okay, quick question on REC, coming back to you on this one, Swati. Kishore from Kerala has got this question. He's bought at levels of 405 2 weeks back, and he's wondering what the upside is from this point. He's currently very close to the market price. What's the view?
Definitely, it's a hold from my view because we have seen if you look towards the weekly chart, is under the consolidation phase within the range of 390 to 410. And we're looking towards the chart setups. I believe very soon we are likely to get a breakout in this particular stock. So upside targets, I'm looking forward to 420 to 425 levels on the near-term futures. You can hold on the long positions as long as the counter holds the 390 support levels. So it's all from my end with the stop loss of a 390 for a target of 425.
Okay, all right. So that's a view on REC. So we've spoken about both PFC and REC. It's time to hit the rapid fire round, and Swati and Asta, you know what this means. So let me start. The first question is Phenolix Cables, and Mani wants to know, he's bought at levels of 955 rupees per share. 210 shares are held. Should he hold or exit? Swati?
You can hold on the long positions by keeping a strict stop loss of a 395 down. Upside 970, 980 levels can be seen.
Okay. Hyundai Motor is the name of the counter we're talking about. Tanuka from Kolkata wants to buy for a period of 3 years. Asta, is this the best buy in the automotive space?
Not a best buy, but yes, one can make a buy at the lower levels of around 2,100 to price target of 2,400 because there are various new launches which are set to come in the coming years. So definitely it's a good long-term story to bet upon.
Okay, Tej wants to know about Belrise Industries. He's holding 200 shares. He hasn't told us his buy price, but he's planning to hold for the next 5 years. Asta, should he do so?
Yes, it recently came IPO of this company, and yes, we are positive on this company. Hold from our side with a price target of 140.
Shalley Engineering. If you've got a view, Swati, 1,800 is a buy price. Short-term view is being sought. Gautam wants to know what to do. He's incurring a loss. What should he do?
You can hold on for the longer term duration because we likely to witness a positive move towards to 1,700 to 1,750. Not to book the losses at the current market price. You can hold on for a longer term future.
Tata Motors, views being sought. We've got Kishore from Hyderabad who's bought at levels of 468.4, which actually is a very attractive price. Swati, would you say that a 760, 780 is possible on the charts, and by when?
Definitely, the view is positive. The buying price are really attractive. You can hold on the long positions by keeping a profit stop loss of a 650. 750, 740 levels can be seen if the Nifty manages to give a very strong momentum rally towards a new high. Probably in a 3 to 6 months, you can get a 750 levels in the near term future.
Okay, Sachin wants to know about ONGC, bordered levels of 264. Asta, from the fundamental standpoint, would you hold at this price?
Yes, definitely a hold is recommended with the price target of 270 to 275.
All right, despite the disruptions, or rather the slip away from questions, we've still managed to take close to 30 questions. Swati, Asta, thanks so much for joining in, for answering all the questions you did. That brings us to the end of this edition of Ask Profit. It's been an absolute pleasure bringing it to you from Anushi and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. Up next is Know Your Company.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome. You're watching KYC. Thanks for tuning in. I'm Harsh Saita. With me is Anushi Vakharia. And Anushi, the entire power space is ripe because there's plenty of demand globally as well as domestically. The runway is very, very strong. And therefore, the entire power value chain warrants a revisit. And of course, understanding the next 5 years and how much of that is actually discounted in the valuations starts to become important at a time like this. So what we've picked up today, viewers, frankly, is Quality Power and Electricals India. And it's, of course, a newly listed company. February of 2025 is when it listed, has given stellar returns from that point. But what I really want to know with regard to Quality Power specifically, they are doing a major ramp up in capacity. Let me make this easier. They did around a 350 crore top line in FY25. The ramp up over the next 2 to 3 years will mean a capacity to clock a revenue of 2,000 crore. Whether they do that or not is a completely different case. But the point being, the ramp up is going to be very, very substantial. And the capex for that ramp up is going to be in around the 750 crore mark. How they fund the capex will be important. But the first piece that I want to know is the timeline for the capacity ramp up. 2-3 years is the 2,000 crore number. How quickly do we phase up? And therefore, during this period, what's the execution going to look like? That's point number 2. What are the downside risks to this capacity ramp up happening and execution of their order book? What could lead to probably a lower number, maybe in year 1, which is FY26 or FY27, and thereafter may push this capacity ramp up as well. So execution risks is the second point. Third point, sustainability of the demand. Now, demand environment is extremely strong, right? We all know that, both domestically as well as globally. But if that were to change, such a substantial ramp up will mean that orders won't flow through, pricing will come under pressure, and so will margins. So you want to keep one eye on that ball as well. And that ball is sustainability of demand as well as how competition is ramping up in other parts of the world, because this is not just a domestic focused player. It gets a large part of its order book as well as execution from global factors, and that impacts the numbers as well. So geopolitical issues, including the likes of a subsidiary which sits in Turkey, an acquired subsidiary, and therefore, how does that really pan out and play out? What are the downside risks with regard to geopolitics? Now, Meru is the subsidiary. Margins are lower than the margins of a Quality Power. They've guided that margins will largely start to move towards the margins that a Quality Power today clocks. So you will have a margin which will slowly get into the 16 to 18% kind of band, which is currently at 13 to 15% for the subsidiary, which is Meru. So as efficiencies start to kick through, you will start to see that ramp up with regard to margins. How does that happen, and how quickly does the blended margin go to 16 to 18% will be the question. FY28 revenue at rupees 2,000 crore. That's the capacity which we spoke about. That's the golden number for me. Can that happen? Will demand sustain, and will execution be possible to hit a 2,000 crore revenue? Capex of 750 crore, where will it be funded by? And fluctuating working capital requirements, is that a concern at all? All of this is what I'd want to know with regard to a quality power. But first off, as we always do, let me start off with what the company is about. It's an Indian origin global tech supplier for power networks. It manufactures high voltage power equipment for transmission as well as grid projects. 74% of the revenue comes from international markets, which is Europe, Asia, Middle East and Americas. I don't know what the goal going forward is going to be. That we need to find out from management. But if there is going to be a diversification, that's also going to be important, because Anushi and me were speaking about that in the newsroom just before the show. Operates 7 facilities in India, Sangli, Aluva, Bhiwadi, and in Turkey, in Ankara. 210 customers, including Fortune 500 utilities as well as industrials, sit as customers for this company. Now, in terms of products, start off with the products, most of which are in the power space. So I'll start off with the first one, reactors. They regulate, restrict voltage and current in the transmission system. Mind you, transmission is extremely important, because not just generating power, you have to transmit it to areas where actually power is required. So they are part of that supply chain, quality power. Transformers is the other piece. They allow for changing voltage, grounding system, system safety, all of that gets covered within the transformers basket. Then there's instrument transformers. They actually measure and control both the metering as well as protection part of the transmission system. And line traps and tuners, they signal filtering, communication in the grid infrastructure. So all of that is required when you set up such a large grid infrastructure. Now, the other part is the power quality systems. That is largely FACTS, which is facts, right? Now, what are facts? Well, they stabilize the grid voltage. They're critical for renewable integration, because you will have fluctuating power, especially where renewable is concerned, and to kind of stabilize that, you need facts which help you stabilize the grid. Then you have harmonic filters. They remove distortions, prevent equipment from malfunctioning. You also have capacitor banks or shunt reactors, and those, they actually improve power factor and voltage stability. The usage, of course, is split into 2 baskets. One is HVDC, which is long distance bulk direct current power transfer, which happens, like for example, across major renewable corridors. That's when HVDC is largely used. And then you have facts, which enhances grid reliability and performance. It integrates renewables and reduces blackouts. So largely products are in 2 baskets based on usage, and those are the 2 baskets which they are in. The business model that they work under, they win contracts first, majorly through global bidding with utilities as well as EPCs, and thereafter they design, manufacture products only post receiving the order. So first you will have the order coming in, thereafter you will have execution happening. Manufacturing happens in India as well as Turkey. We've spoken about that. It sells to utilities, EPCs, renewable developers across 100+ countries. There are no long-term contracts which it enters into, and it expands via strategic acquisitions. Something like a Meru is what they've done in terms of acquisitions. Let's talk about raw material costs and exposures there. Well, they have to buy what kind of raw materials? Aluminium, copper, steel, insulation, power electronics, resins and insulators. All of those, or most of those, are commoditized, heavily commoditized, and therefore the raw material prices fluctuate. There is a risk of that. Price volatility and supply disruption, both are big risks within the value chain of raw materials. And what they typically try or attempt to do is they negotiate pricing in advance, and they try to pass on cost inflation to the customer. So all of those are largely an understanding of what the company does and what the possible risks are, especially on the raw material side of things. But let's start off with the key metrics, and I'll have Anushi come in. Anushi, anything you want to give us in terms of perspective with regard to this company, about the company?
No, in terms of, the overall picture, you've covered it fairly well in terms of how these segments are. Interesting would be to get a sense in terms of where the mix is concerned in terms of the coil production. We are looking at significant capacity expansion plans going in Sangli, especially about 9 times of an increase is what we are looking at. So questions on that would be something that we should be watching out for. But, let's start off with the income statement bit first now. It's a consistent kind of a growth story that we are seeing in terms of where the revenue growth number is concerned. Last year, they clocked in about 11% of a growth. In fact, if you look at 12% of a growth, in fact, if you look at the 3-year CAGR, we are seeing about a 23% of an increase. Now, margins on the other side, we've seen a healthy uptick in terms of where the FY24 to 25 numbers are concerned. In FY25, we've clocked in margins of 19%. This is in comparison with the last 3 years of 13% of a profile that we are looking at. 41% of a CAGR growth is what we are looking at. Net profit about 34%. So it's the margin trajectory which is interesting going forward as blended margins. They expect to keep it in that particular range, right?
Yeah, that is the goal. Blended margins will largely be in that range, and especially in the 16 to 18% band is what they've guided for. They'll come off largely because of the acquisition they've made. So you want to keep your eye out on that margin trajectory. But let's quickly look at the balance sheet as well. The equity has obviously increased because of the IPO that's happened in FY25. You look at the book value, which is currently sitting at roughly 500 odd crore. The market cap is around 6,100 odd crore. So price to book is around 15 times. You're looking at borrowing, which is negligible, frankly. No concern where the borrowing is concerned. And you look at the cash bank balance also, it's fairly healthy. So when you're looking at the overall balance sheet, no concerns there. There's enough capital available to invest, and therefore we've given this a thumbs up. But cash flow, Anushi.
Cash flow also, I don't think we have any reason to complain over here. Cash flow from operations also, it has seen an uptick in terms of the last 3-year picture is concerned. EBITDA to supporting that kind of a growth that we are looking at. In fact, cash flow from operation to EBITDA, if you just pull out that ratio, we are looking at a ratio of around 100% to 95% in the last 3 years or so. In fact, even if you look at the cash flow from operations, it's the receivables, inventory, they have something, a bit of that we can be asking them in terms of where the net working capital is concerned.
Yeah, so that's the case with regard to the cash flow. You look at net cash flow, positive at 141 crore, that's largely because of the fundraise as well. So some perspective there. But return ratios, you're seeing largely very good return ratios. Your ROEs, this is straight from the investor deck of Quality Power. So those are your ROE numbers, anything between 23 to 30%, fairly healthy, and nothing to be concerned about. The guidance seems to suggest that they'll continue, or rather they continue to aspire to be in that 25 plus minus kind of ROE band. So fairly healthy. But shareholding, Anushi?
Shareholding, we do not have that much of history considering that it's a recent listing, but promoters continue to have about 74% of stake in the company, while FIIs and DIIs cumulatively have around 13 to 14% of stake, while public accounts for about 13% stake. So promoter holding over here continues to remain on the healthier side. Let's see over the quarters, how does that pan out?
Well, yes, let's look at street cred now. And when you're looking at that, IPO price was 425, the listing price was 436. Since listing, the gains have been solid. It's been a doubler since listing, near doubler. And the last 1 month returns are very, very strong, around a 51% return that it's given over the last month or so. So extremely strong gains, thumbs up there as well. You want to cover outlook and thereafter valuations, Anushi.
So let's talk about the outlook. So it's a strong growth story that we are seeing. We just saw about a 23% of a CAGR in the last 3 years or so, but that's not the case scenario that we are seeing building for FY26. Of course, a lot of these incremental capacities coming in for the company. For FY26, if you are just looking at the target revenue that is in the range of 700 to 850 crore that we are looking at, implying about more than 100% of an increase in terms of where the revenue growth is concerned. Even the order backlog, if we are seeing, that is 750 crore, a book-to-bill ratio of around 2 times is what we are looking at. So that remains on the healthier side. Again, the company in the next 4 years also, if you take that perspective and picture, 2,000 crore is the expectation that we are looking at. So very strong growth profile in mind that we are seeing. Of course, this is with the blended margins range in 16 to 18% that we are seeing. But it's particularly the capex plans that, Harsh and I were just speaking about earlier, which is interesting. Firstly, is the Sangli plant expansion that we are looking at. With this, it aims to become world's largest coil factories as well. This is expected to increase the capacities, production capacity by 9 times. And this is over the period of next 1.5 years or so that we are looking at. Completion for this one would be by second quarter of FY27. So capacity utilization levels from that we are seeing valuation, if we just take that into picture, now we are looking at a multiple of over 93 times over here. This is considerably expensive considering the kind of jump also that we've seen in the share price, but also we do have to keep the growth picture as well in mind. Now, if you're just doing a pure check over your transformers, rectifiers or Hitachi Energy or GE Vernova, all of these power equipment players, if you are looking at, trade on higher multiples, 17 times. In fact, Hitachi Energy of over 215 times is the multiple that we are looking at. So, quality companies, but not so cheap valuations, right, Harsh?
Well, yes, and therefore, let's really stack up the ratings all together. And very healthy, honestly, it's been difficult to pinpoint any concerns with regard to any of those metrics. Let's quickly flip. There you go. Shareholding, street cred also 74% holding. Street cred has been solid, and that gives us a 6.5 out of 8 on our KYC rating with valuation. The only piece of possible concern given the way in which the stock has performed. But let's bring on board Mr. Bharanidharan Pandyan, who's the Joint Managing Director at Quality Power, to talk to us about what to expect. Mr. Pandyan, good morning. It's good having you. I want to first start off by understanding the sustainability of the growth and where you see yourself 3 years from now as you position for this very, very strong capex. Do you expect the kind of traction you're seeing today globally as well as domestically to sustain, and therefore you closing in on probably a 100% capacity utilization of 2,000 crore which you're putting up?
Morning, gentlemen. Thank you for having me here. So what I'm just, so what we are doing with the capex is the promoter is putting a soft loan into the company. It's a 20-year-old soft loan with about 7% give and take interest with a 3-year moratorium. So it is being funded by the promoters, and it is not 750 crores, it's about 125 crores. Most of which have already been spent into the company, and we believe we should be getting the capacity live in the next second quarter next year. There's a lot of more momentum around the HVDC and FACT space, especially with the renewable energy integration happening across the world. We believe we are just starting the peak of the HVDC curve in India, we being one of the very few manufacturers globally to be able to deliver such a product, qualify, and also we need to have a capacity to deliver, because these are massive contracts, not only in India, across the world. We do sell in over 100 countries. In the past few years, we have supplied HVDC components to grids in Abu Dhabi, to grids in Korea. We believe we will be allowed a lot more opportunities in the Western world as they are changing the grids faster than what, say, India is. To give you a recent idea, the grid of UK, which was the national grid, just released an order for 59 billion pounds sterling. That is the kind of orders that will come in future, even in this part of the world, because the current infrastructure, what we say of the country, cannot sustain the kind of renewable energy, the pace at which renewable energy is coming up without the power electronics getting in. So in the power electronics space, we already own companies which produces SVC and STATCOMs, which help deliver those components. those energy as a system side. On a component side, we are integrating components and capacities that get into this specific piece of business. So as we grow, you would see a lot more, expansion of capacities and also acquisitions, because we are quite bullish about it. We have had a string of acquisitions in the past. The last week, we have just announced one more to the street. It's a company in Pune called Sukrut Electric, which are in the business of high voltage transformer components again, with almost a 7-decade experience in the sector.
Point taken. So I want to unpack, you've said quite a bit, so I want to unpack that a little bit. Firstly, for viewer context, HVDC, high voltage direct current. So that's for, of course, viewer perspective. But so the capex plan is not 750 crore, it's 130 crore.
25 to be precise.
125 crore. Understood. All of that is going to be funded through a soft loan, 20-year, 7%. Okay.
So we are betting on it as promoters.
Fair point. Okay. And lastly, sir, so as you, is the predominant focus still on global, or is there going to be a larger focus on domestic? Because you suggested that domestic requirements will go up, but my understanding of what you're saying is it's not gone up as of now.
The normal cycle time for an HVDC contract is between 3 and 4 years. So when some of the large contracts come in this part of the world, the EPCs take a few months to be able to generate that into specification and ordering. So we have already given a guidance that in the near future, we do expect some orders coming in. So this is also anticipating global demand. We have been historically a company focused more on global revenue. We have had approvals in over 100 countries where we already sell. So we would like to keep the guidance on both sides, domestic and global. So as a company with the holdings in India, we would like to have the biggest benefit of all the HVDC facts investments in this part of the world. So we will see some uptick in domestic revenue going forward in the next 2-3 years, but our focus is still global. Our intention is to be a global power quality company and not just a domestic company.
Okay, and Mr. Pandya, I also want to understand in terms of the capacity utilization levels as well. You said that in the next 2-3 years or so, you'll be clocking in revenues of about 2,000 crores. Just want to understand at what utilization levels would be, and would there be a further uptick post FY27 also if you look at?
So this is a very large plant that we are bringing in. It is more than 300,000 square feet with another 1,000 more people joining the workforce. So we believe the capacity utilization will improve over a few quarters. At this current moment, we have more than 95% capacity utilization. So it will also decongest us immediately, and then we will build upon the product line. So we are betting into the company, into the infrastructure as promoters, because we believe there is orders coming in the market.
Okay, now coming to the margin picture, the blended margin range is what you've given in the range of 16 to 18%. Now, Meru acquisition, in near term, while there would be some bit of pressure in terms of where the margins are, we expect to bring it in that range. Just want to get an overall picture in how the margins would fare in FY26 and post that FY27, 28, and also if you can talk us about the return ratios also that we can expect.
So Meru is a fantastic company, great promoters, great technology, again working at 500 kV levels. Primarily focused in India. We believe with our support and our network, we would push this across the globe. We have had some successful exhibitions in the US where we have already more than 6,000 references. We are trying to get into Europe, Middle East. We recently announced an order along with Meru, where we signed a 4-year blanket with the Israel Electric Company. So we believe as we shift them more towards the similar margins like us, we would see a lot more exports. And again, the domestic demand supply mismatch that is happening in the transmission level, that would also impact on the pricing power in the internal market. So that is why the guidance is, I would say, conservative.
Got it. Mr. Pandyan, let me come straight to the point. Let's talk about FY28. Can you do a 2,000 crore top line with a 16 to 18% margin? Is that doable?
So the last question that was asked on me, what was the peak revenue out of the factory? The peak revenue out of the factory was 2,000 crores.
Yes.
So the guidance given at the public markets in the last con call was about 700 to 800 crores. We believe we are in the the timelines or whatever the guidance points are. further public data, it's still not public because we are in the silent period. So please, let's me post the silent period on that.
No, sir, absolutely not violating silent period. FY26, fully appreciate that 750 to 800 crore is the guidance, and we've not asked you for that. So, but FY28, is 2,000 crore a realistic number?
We are chasing the best possible internal, both internal and external.
Point taken. What's the risk, margin risk to that, sir?
So whenever we are in the products where we have already established ourselves globally, we see that the margins to be stable. So the old companies do not have a problem in margins. The new companies normally enter at a lower margin, but a couple of years in, I believe we should be able to pull them closer to where we are. So we do see ourselves as we have written in our DRHP, we are also an acquisition-driven company. So 50% we aim to be doing ourselves, and 50% we try to acquire technologies that are peer to us, so that we can increase the total basket that we offer to our global customers. Since our brands are approved in some of the largest utilities in the world, we believe that we will be able to push through the other products.
Got it. Thank you so much, Mr. Panyan, for coming and speaking with us. Completely out of time on this edition of KYC. Thank you, viewers, for tuning in. From Anushi, myself, that's a goodbye.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहाँ तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Markets recover to trade near day's high, Nifty above 25,200. All sectors in the green, auto and realty lead gainers. And HCL Tech's share falls after Q1 earnings missed estimates. The company revises lower end of FY26 guidance from 2 to 5% earlier to 3 to 5%. India secures long-term DAP fertilizer supply from Saudi Arabia, Coromandel International Fertilizers and Chemicals, Travancore and Chambal Fertilizers all abuzz. And Shubhanshu Shukla, who scripted history by becoming the first Indian to set foot on the International Space Station, is on his way back, will undergo a rehabilitation program for about a week after splashdown. Splashdown expected at 3 p.m. Indian time. Hi there, you're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at the markets and let's take a look at what the markets are doing. So you do have Nifty that is managing to hold up quite above that 25,200 level. So that's something that you have for the Nifty. Sensex also good moves coming in, all sectors holding on to a tinge of green as we speak. And in terms of top gainers, you have autos that are in the fast lane, realty that is cementing gains, PSU Bank, Pharma, rural as well as IT sectors also holding on to a tinge of green at this point in time. Let's also take a very quick look at some of the top gainers from within the Nifty 50 pack. So when you take a look at the gainers, Hero MotoCorp is the one that is buzzing away. 3.5% uptick coming in for that one. Sun Pharma as well, 2.5% uptick there. Bajaj Auto, Eicher Motors, Wipro, Hindustan Bank, Infosys as well as Shriram Finance from within the pack of Nifty 50 that are gaining at this point in time. On the flip side, you also have some of these counters, the likes of HCL Tech on the back of a miss on the Q1 on all fronts, on all counts, Eternal as well. That's also down about 1.5%, HDFC Life, SBI Life as well as Tata Steel, some of the other buzzers as well. But tell you what, let's take a look at the housing company that we have that is Ashiana Housing, because you do have the expansion plans that are in focus on the back of the lower revenues as well that we'll be discussing. We'll be taking you through the earnings fine print as well when it comes to this company. And we have Varun Gupta, in fact, the whole-time director at the company joining us. Thank you so much. And a very good afternoon to you. The first question that I wanted to, in fact, take with you was about the lower revenues, because you do have delays in terms of the deliveries of Advik and Anmol in the fourth quarter. But now that has been postponed to FY26. What's the update here? What do you make of this then?
Hi. So our deliveries get reported when units are delivered, and deliveries can, are very difficult to time to a particular quarter. Given completion of an entire phase, getting the occupancy certificate and other approvals that are required to get deliveries. So that came in and delayed it to this year. That said, FY26 looks solid in terms of revenue recognition and also improvement in margins. And so this year should be good, according to me, in terms of reported profits and revenues.
Okay, what we are seeing, Mr. Gupta, this is Anushi joining in, by the way. First quarter update, we've seen a healthy set of numbers coming up in terms of where the area booking is concerned, and this is in terms of valuations also that we are looking at. Just want to overall get a picture in terms of how the price realizations are stacking up, especially the key markets which are there, considering that there has been chatter about now the price realizations being at the higher levels, which have led to some bit of pressure on that demand. Is that the scenario playing out? To explain us that as well.
So we have seen price increases secularly across markets. Our average price, like last quarter, was 7,200 rupees a square foot. I think we are in that 7,000 plus range. We do operate in multiple price points, starting at somewhere close to 4,000 and going all the way up to 15,000 rupees a square foot. I think prices are holding up well, and they should continue to move up across markets. That said, the pace of price increase will be slower than before, because the run-up post-COVID has definitely been at a very, very fast clip. That said, I do not see price decreases. I do not see there are chatters about it becoming too expensive. I think overall stock and supply in the market remains lesser. So the demand supply equation is in favor of price increases, because the supply side continues to remain constrained across markets. That said, different markets will behave differently in price movements going forward, which it has also done. In the past, some markets have been faster than the others, and in the future, some other markets might be faster than the others.
Okay, so that is comforting to know. So just in terms of, where the FY26 is, if you can just give us an outlook in terms of where the FY26 guidance is considered, considering that you have a couple of launches. So if you can just give us a breakdown in terms of the key launches also that are expected in the next few quarters, and what is the overall potential that you're looking at?
So we are targeting 2,000 crores plus of pre-sales over the year. We have two new project launches that are slotted for this year. One is Ashiana Aroham in Gurgaon in Sector 80 and Ashiana Amaya in Jamshedpur. These both should get launched in the third quarter of this financial year, or maybe the fourth quarter of this financial year if they slip. And in terms of revenue, we also give a sense of what reported revenues we are expecting this year. I think this year should be good, significantly better than previous year, and we should be doing 1,200 crores plus of revenues in FY26.
Okay, so last year, we did see a bit of a blip in terms of where the revenue was concerned, and this was on the back of that delays which had taken place in terms of approvals coming through. Has that eased out in FY26? If you can give us a breakdown in how FY26 differs from FY25 for the overall real estate space.
So two things. So the issues of delivery have eased out. So we should definitely have good deliveries. Last year was, to me, a little bit of a blip in terms of the overall reported revenues, and we should have a good year this year. And FY26, I think, would be good for the sector, across the sector. As I said, supply still remains to be constrained, and the favor of the demand supply equation is favorable towards more demand, and that will continue to be good for the industry going forward.
So that's the view that we are seeing in terms of the outlook forward. Just also want to get your sense in terms of, you talked about the key launches which are expected in this year, but even the other launches which are there, the overall deal pipeline, if you can give us a number for that as well. What's the overall number that we are seeing in terms of the gross development potential value, considering, and what is it currently?
Okay, so currently our total stock value, including sold stuff which has not been delivered, has a revenue potential of about 11,000 crores. We are of that, about 4,500 crores worth of stock has been sold. So we have about 6,500 crores of unsold stock, but total revenues of this is to come. We are working on 4-5 more transactions. We are looking to add that. As and when that gets added, we will tell you where how the gross development value of those is. One of the things I think, though, as an organization we are doing right now, we are pivoting more and more towards senior living, whereby we will see a higher proportion of sales and much higher proportion of our GDV added and capital deployed going to senior living as a specialized sector for us. And we see a bright future for the company in that particular sector going forward.
Okay, so but on overall 11,000 crore is the potential that we are seeing building in for the next few years, right?
Correct.
Okay.
That is correct.
Okay, fair enough. And just want to understand with this, what would be the margin profile also that we should be looking out, because we earlier had some legacy projects which had lower margins. So a shift in terms of margins and the return ratios that we should be seeing.
So what the company is targeting is to have a cumulative profits of 2,000 crores at the PAT level from these 11,000 crores of sale value, including, let's say, the 450 got that delivered last year. So between 1st April 24 to 31st March 30, in that 6-year stack, we are looking at 2,000 crores of cumulative PAT, which works out to about 18-19% of after-tax margins, which is a significant improvement from our historical profit margin profile. And that should, my view is that that's what we are gunning for, and hopefully we'll get there.
All right, then thank you so much, Mr. Gupta, for taking time out and joining us this afternoon. Let's hope that you managed to reach that guidance that you've talked about. But thank you so much for joining us. That was the management at Ashiana Housing joining us to talk to us about their results as well as the growth roadmap going forward. But tell you what, let's talk about what is buzzing in town. Tesla, that's the company that is set for an electric shake-up in India's luxury auto market, with the sleek Model Y SUV leading the charge and pricing that could rattle rivals from Germany to homegrown EV heroes as well. The roads are about to get a lot more thrilling. In fact, we have Vishwanath Nair who's joining us with an update from the experience store itself. Vishi.
You know, the pricing currently between 60 and 62 lakh, that's roughly the pricing for your rear wheel model. There's also another variant, the long range model, which is available on sale in India, and that's priced slightly higher at about 68 to 70 odd lakh. There are, I think, about 6 different colors that are available within the Model Y that is being put on sale. You've got the stealth grey, the pearl white, you've got the diamond black, glacier blue, quicksilver, as well as ultra red. These are the 6 different colors, and of course, depending on the color that you buy, the pricing of that vehicle is going to change. But interesting sort of stats here: 500 kilometer roughly range of this vehicle. You've got a top speed of about 201 kilometers, and it goes from 0 to 100 in less than 6 seconds. These are all stats that are available on the Tesla website, where all you need to do is change the geography you're looking at the car from, and it gives you the option of booking that car. The other option, of course, is coming to the store and actually getting the feel of the car. These Model Ys are enabled with self-drive if you want it. That's at additional cost. There's also Grok AI, which is available to be put on these vehicles, which customers can use, and of course it comes enabled with Wi-Fi. So a lot on offer at that 60 lakh price, 62 lakh price for the Indian customer. Whether customers actually take the bait and buy this, that's something that we have to watch out for.
Well, absolutely, and that was an electrifying debut, right? And priced at just 60 to 62 lakh rupees. That's the kind of price range that you're looking at for Tesla. It's just one click away, like Vishy just told you. You can just select the city that you're browsing from. But let's also go across and listen into what experts then had to say about this particular entry. Tesla will need to sharpen its focus on reaching the right customers. And that is the word coming in from Nikun Sanghi, who's the past president at FADA. Let's go across and listen in to what he had to say.
Tesla entry only makes it more interesting, but I think the Indian EV industry has matured, and we already have some very exciting products given by all other OEMs, including the Indian OEMs, to the market. So it'll only make the market more interesting. I think a lot will depend on how Tesla does its networking, because in India, the reach is extremely important, and Tesla, as we know, is opened in Bombay, as trying to do it in Delhi, but I think they will need to have a very big reach if they want to do numbers. the networking, I think, let's see what the plans are in terms of how they want to network. But presently, I don't see this as a challenge to the other players. And all that it will definitely do is excite the appetite of the Indian consumer.
All right, and Tesla has a rough road ahead if it wants to play the number game. There's a lot for it to focus on, but let's take a look at what are the key strengths when it comes to Tesla. In fact, Hormaz Saurabhji talks about just that. He's the editor at Autocar India, discusses how the Tesla Model Y, in fact, is the perfect model for the country. Let's go across and listen in.
We didn't expect them to, come running in here with manufacturing. It's not easy. You need to build a whole supplier ecosystem. Entry barriers are very, very high to get into full-scale manufacturing over here. So sensible strategy to come in with a CBU. And also the Model Y is the most appropriate car for the Indian market. They initially planned the Model 3, but clearly that wasn't suitable, especially from a ground clearance perspective. This one is much better. And I think, obviously Tesla has got a certain pull. It's really the rock star of the EV world still, despite all the challenges it has. And, I think we will see an initial, there'll be a lot of takers initially. So obviously, they're going to be niche volumes over here. There's an affordability issue and people spending so much on EVs also. We've seen, I'm seeing comparable products, whether it's from BMW or Mercedes, looking at what they sell, they're selling about 300 EVs a month total at that price range. So you can see that the volumes are very small. Even let's, give Tesla the benefit that, just by the pull of its brand, it will sell a little more. But I think tops, you're not looking at more than 4,000 vehicles a year.
All right, and that was the expert opinion when it comes to what was deemed as the rock star of the EV world. That was the word coming in from Hormaz Saurabhji as well. But let's move on. Take a look at the quarterly rebalancing of the MSCI Global Standard Index. The cutoff period for selecting the stocks for this review begins today, July 15th, and will also be running until July 28th. In fact, Somit is joining in with the update on this.
Well, yes, multiple stocks remain in focus given the fact that the cutoff date for MSCI stock selection has started from today, and this will last till July 20th, and MSCI will select any date from these dates for that cutoff. Now, this announcement of stocks that get selected or get removed or get moved from small cap to standard index, this announcement will come in on August 8th, and flows regarding the passive flows will come on August 26th. Now, which are the stocks that are expected to see a fresh inclusion in the list? Names like Swiggy, Vishal Megamart, Wari Energies, Mazgaon Dock and Hitachi Energy are among the high probable stocks that could get included in the MSCI Standard Index, and because of this inclusion, we could see inflows of anywhere between 169 to 201 million US dollars. Now, when it comes to stocks that could move from the small cap to the Standard Index, Coforge, Glenmark Pharma and Paytm have a high probability of moving from the small cap index to the Standard Index, and because of this move, there could be inflows of anywhere between 212 to 406 million US dollars, with the highest coming in for Coforge. So keep an eye out for Coforge. Stocks like Fortis Healthcare and G Vernova T&D have a high to medium probability of moving from the small cap index to the Standard Index, and if that happens, then there could be inflows of anywhere between 200 to 260 million US dollars. And stocks like Max Financial and Uno Minda have a medium to less probability of getting moved from the small cap index to the Standard Index. However, if it happens, there could be inflow of anywhere between 150 to 300 million US dollars. Now, two stocks that have a high probability of moving out of the Standard Index, and that is Sona BLW and Thermax, and if that happens, then there could be outflows of anywhere between 134 to 100 million US dollars. So keep an eye out for these stocks. Obviously, the final cutoff date is not yet decided and the list is yet to come, but these stocks would continue to remain in focus.
Well, absolutely, Samit. We'll keep an eye on all of those counters that you've highlighted for us. Tell you what, let's also keep an eye on the fertilizer companies because they're in focus after India, Saudi DAP deal. And in fact, you do have 3 companies that have signed a pact with Saudi Arabia. What is the deal about? Which are the counters that are buzzing away in trade? Varsha is joining in with that update.
Yeah, thank you so much for that. So 3 companies that we have mentioned is India Potash, Cripco and Coromandel have signed the agreement. Now they will import 3.1 million tons of DAP, which is nothing but a fertilizer, annually for 5 years from 25-26. Now the deal, if you see, this significantly boosts India's DAP supply from Saudi Arabia. But why this agreement was made or why this deal was made? One is reducing oversupply, over reliance on China, which is the primary driver which the deal has been made. India has a strategy to diversify its fertilizer import sources, as we are heavily import driven when it comes to fertilizers. This agreement comes as China has halted specialty fertilizer exports to India for 2 months. This was a news a few days back. This forces India to find costlier alternatives from Europe, Russia and West Asia, and this deal will help to stabilize and potentially lead to lower cost over the longer term. And India, if I were to talk about the dependency of India on China, if you see, India depends on China for almost 80% of the specialty fertilizer imports, and the long-term agreements provide stable supply of a crucial input. Though only 3 companies have signed this agreement, but if you see, a whole lot pack of fertilizer companies are buzzing today. Maybe in a few months down the line, we may see more agreements of this kind, but overall fertilizers is buzzing on the back of this news.
Well, absolutely. So that's a water-soluble fertilizer that we're talking about. And on the back of this very important deal, you do have some of these counters that are buzzing away in trade. But let's move on. Let's get you the word from a management. And an important one at that, deal wins are likely to be healthy in the second quarter. That is the word coming in from Warren Harris, who's the CEO and MD at Tata Technologies. Let's go across and listen in to what else he had to say about the company's growth roadmap.
We've been selected by one of the large global players as a strategic supplier, and that will provide a platform for growth in Europe, the United States, and Scandinavia over the next 3 to 5 years. And so it's these types of deals that really are giving us the confidence that the worst that we've been grappling with in terms of growth is behind us, and we can really look to some of the green shoots that are presenting themselves to build the momentum that clearly we want to see as a company. Not only are we confident about 3 and 4, we're also confident about the second quarter. The deals that we've closed have informed an order book that is materially larger than the order book that we had at the end of the first quarter last year. So it's on that basis that we are guiding positively.
All right, then moving on, let's take a look at Ola Electric because that's the one that's down about 3% in trade. Let's take a look at what the brokerage verdict is. In fact, it's quite mixed. So when you take a look at what Kotak Securities is saying, they're talking about how they're maintaining a sell rating. Target price is 30 rupees. Losses, they've talked about how that is narrowed sequentially. Volume offtake remains weak. That's the word coming in from Kotak Securities. But they're talking about how volumes are still a cause for concern. Muted industry growth is also something that they're highlighting, along with more competition as another important cause for concern for the company. Let's talk about BofA as well, because BofA has maintained an underperform rating with a target price at 45 rupees. So they've talked about how this is a comeback quarter, but challenges on growth as well as market share remain. So they've talked about gross margin delivery. That has taken the street by storm, but they're also talking about the battery plant scale down. That is a right capital decision that they've highlighted. Along with that, they've also talked about how there are more markers to track on the road to turn constructive. So maintaining an underperform nonetheless. But let's move on, talk about Goldman Sachs as well, because they're maintaining a buy, quite bullish on the counter. In fact, they've hiked the target price to about 63 rupees from 60 rupees earlier. They're guiding for a flattish FY26 revenue as well. 5% auto EBITDA margin is something that they're talking about. And they're also acknowledging the management's efforts on a host of things. So you're talking about positive EBITDA. That is something that they've highlighted, and efforts towards FCF break-even is also something
that they've highlighted as important, but they still see room for visibility on volume growth as well as market share. So that is the brokerage verdict. As far as Ola Electric is concerned, so quite mixed. Kotak Securities maintaining a sell rating, Goldman Sachs maintaining a buy rating, and BofA maintaining an underperform rating. But tell you what, with that in mind, let's move on to a few more counters. Let's take a look at RVNL, Railtech, as well as Power Mesh. In fact, Vansh is standing by with the update on those.
Right. So the first one on the list is RVNL. Now the company has received a letter of acceptance for orders worth rupees 447 odd crores from Delhi Metro Railway Corporation, and the execution timeline for the same is 3 years. And the order book for the company stands at 1 lakh crore as of March 2025. Second on the list is RailTel. Now the company has secured a 264 crore order from East Central Railways, and the order is for the provision of Kavach train, that is collision avoidance system, and the execution timeline for the same is 2 years. Third on the list is Power Mech Projects. Now they have basically secured 2 orders. Firstly, they have secured an order worth rupees 498 crores from SJVN Thermal. The order is for operation and maintenance of Buxar Thermal Power Project, and the execution timeline for the same is 39 months. Secondly, they have received orders worth rupees 53 crore from Jhabua Power. Now this is a JV of NTPC, and the order is for operation and maintenance of boiler, turbine and generators, and the execution timeline for the same is 3 years with a provision for extension of 1 year. So these are the stocks that are buzzing in trade today.
Well, absolutely. Thanks, Vansh, for joining us with the list of stocks that are buzzing away in trade. But tell you what, with that, it's curtains down on this edition of Markets at 12. Thank you so much for tuning in.
That's huge. That is a biggie. It's out of
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers here watching Profit Buzzers, and I am Hira Datia. With me is Varsha Chandani. Let's quickly take a look at what markets are doing at this hour. It's going to be an interesting day of trade as we speak, because if you talk about Nifty 50 as well, we are near the day's highs, slightly off from there, but you're seeing gains of nearly 0.5% coming in there. Apart from that, Nifty 50 is going to be Bank Nifty is going to be interesting, and the kind of recovery that's coming with regards to IT as a sector. Bank Nifty is slightly outperforming what's happening in terms of Nifty 50. Let's pull up Nifty IT as well. From the day's low, you're seeing a sharp recovery that's come in terms of intraday trade, and you're seeing Nifty IT, which is pretty much in line with what Bank Nifty is doing in trade. Let's look at the sectoral heat map, and along with that, we'll talk about the benchmark, Nifty 50 stocks. Auto is the top gaining sector today, and what the contribution? Yes, it's coming in from a Hero Motor on the back of the positive commentary that we've heard from the annual report, and we will take you that as well, because they're looking at an international expansion. Real estate, strong moves on that one. PSU Bank Index, Healthcare and Pharma, all of them on a strong footing. So all the sectors are trading in the positive. There is nothing which is in the negative as we speak. Let's pull up what's happening in terms of the heat map on Nifty 50 stocks, because that will also give you an idea as to what's the breadth looking like. Absolutely in favor of the bulls, with the Hero Motors, Sun Pharma on the back of a project drug approval, Bajaj Auto, Wipro, iSure, M&M, all in the positive. In auto, the sentiment is also pretty high today, with the new Tesla showroom opening up in India, and that's what probably is aiding the auto sentiment today. HCL Tech under pressure on the back of earnings. HDFC Life ahead of numbers is trading under pressure. Eternal is seeing some bit of profit booking today after that spectacular up move that we saw in terms of yesterday's session. It was the stock of the day. SBI Life under pressure. Tata Steel, Asian Paints and ONGC. These are the few names that we should be watching out for. Broader markets, interesting trends right now, Varsha.
Actually mirroring the benchmark, I would say. A lot of company specific news here. Also, if you see Nifty mid cap 150 is up 0.75%, I beg your pardon. On the gainer side, you have all the fertilizer stocks gaining in the street today, because the three companies have signed agreements with Saudi, Indian Potash, Cribco and Coromandel. They're going to import 3.1 billion tons of DAP, but because of this, all the fertilizer companies are actually buzzing. We may see further agreements from these companies as well. You have Tata Elxsi, HDFC, AMC and Bandhan Bank, which are buzzing when it comes to mid cap 150. On the loser side though, you have Nykaa, you have IDFC First Bank, NMDC, M&M Finance and Mankind Pharma, which are on the losing trend when it comes to Nifty mid cap 150. On the small cap 250 though, let's see what that counter is doing. Is up almost up 0.75%, same as mid cap 150. On the gainer side, you have Godfrey Phillips, Sobha, Alcargo Logistics, Aether, RCF, again the fertilizer stock. Even Sterlite is also buzzing when it comes to small cap 250. On the loser side though, you have Tejas Network, which is down. This is on the back of weak numbers that the company has posted because of the delay in one of the purchase orders that the company didn't receive. Even Anand Rathi, Cera Sanitary, Metropolis are some of the losers when it comes to small cap 250. So yeah, here a lot of company specific, I would say. Or even the fertilizer sector is one which is buzzing when it comes to broader markets.
Interesting moves that we are watching out for so far. In fact, high single-digit earnings growth is what is on the cards in terms of FY26, and this is according to Nilesh Shah, MD at Kotak Mahindra AMC. Let's quickly listen into what he had to say.
The R&D fund of 1 lakh crore, again executed well, could create growth opportunity through innovation. Put together, I believe there is pro-growth stance coming up in government and regulator policy. Monsoon has been good, macros have been stable, and there is a possibility of earnings upside. But as of today, we are waiting and watching the trend. We believe FY26 earnings growth for Nifty 50 is likely to be in high single digit. Mid-caps will deliver double-digit earnings growth.
Right, so that's the word coming in from Nilesh Shah. Double-digit growth is what he's looking at in terms of FY26. But moving on, let's look at individual stock-specific action. You have HCL Tech and Tata Tech, both of these companies that have reported numbers. HCL Tech trading under pressure with cuts of around 3% coming in there. And if you talk about Tata Technologies, in spite of a weak set of numbers, though they have been above what the street was estimating, the stock is seeing gains of nearly 2% coming in there. Firstly, let's quickly listen into what both the managements had to say from here on.
Yeah, on the restructuring program, I think, our objective is to get back to our 18 to 19% margins. So I cannot give you some more specifics at this point, but as we go through the quarters, we will give you the specifics.
Cost.
Yeah, there will be an incremental cost involved in achieving this, and that is also the reason we have taken our guidance to be a little lower this year.
We've been selected by one of the large global players as a strategic supplier, and that will provide a platform for growth in Europe, the United States, and Scandinavia over the next 3 to 5 years. And so it's these types of deals that really are giving us the confidence that the worst that we've been grappling with in terms of growth is behind us, and we can really look to some of the green shoots that are presenting themselves to build the momentum that clearly we want to see as a company. Not only are we confident about 3 and 4, we're also confident about the second quarter. The deals that we've closed have informed an order book that is materially larger than the order book that we had at the end of the first quarter last year. So it's on that basis that we are guiding positively.
Okay, so that's the word coming in from the management of Tata Tech and HCL Tech. Let's also get in Prashant Tapsi, Senior VP Research Analyst at Meta Equities. Prashant, good afternoon and welcome to the show. Always a pleasure to speak to you at NDTV Profit. My first question coming to you is with regards to both of these IT companies. If you talk about HCL Tech as well, they're talking about restructuring, bringing back margins in that 18 to 19% range. There would be additional costs also on the back of restructuring. They've cut the guidance on account of this. And on the other hand, if you talk about a Tata Technologies, the question over here is as to what happens, because they're confident for a strong second quarter on account of deals that have been closed so far. What would you advise investors to do who want to make a fresh entry with regards to IT as a sector, specifically HCL Tech and Tata Tech, and someone who's already holding both these stocks?
I think when we compare these two stocks, they are differently in terms of focus of the sector performance. Tata Technologies is morely focused on the automobile sector, and that is spread globally. And HCL Tech is similar to an IT company, similar to what TCS or Infosys works. So for me, if you ask which would be a better stock for investors, I think Tata Technologies can be a better stock for me. Despite the numbers were not so encouraging but market really took it very positive. Market was expecting very much bad in terms of quarter-on-quarter numbers, but the company has surprised to give some kind of better than expected street numbers. So the street is celebrating some kind of positive trend. But overall, if you compare both, I would like to have a wait and watch approach on HCL Tech. I need to wait and watch how the geopolitical tensions takes place, and with respect to tariffs, and again the way how IT spending will be trending going forward. So wait and watch for HCL Tech. With respect to Tata Technologies, I think every dip high can be an opportunity to buy.
Okay, apart from Tata Tech, so Tata Tech, every opportunity you would, as a dip, would be an opportunity to buy. Anything else that comes to your radar in terms of IT? Because, we were just doing this interesting study where your large cap IT stocks are actually losing market share in terms of your mid cap IT companies. Any topics?
So again, in this market, I think one should try to look at large caps only. TCS looks better on the charts right now. I think we have seen last 3 to 4 quarters, TCS has managed to take support at these current levels, which is at 3200. So for a risk adverse, very conservative investors, I think TCS can be a better pick. And if you want to take a riskiest bet, I think Persistence can be a bet where a mid cap IT stock can do better from the current levels. So for a large cap, TCS would be a better space. Again, for a mid cap and small cap, Persistence can be a better pick.
Right. Well, thank you, Prashant, for that view. Two stocks which are in focus on the back of earnings. One is Tejas Network and the other one is Rallis India. But contrasting set of Q1 numbers, if you see for Tejas Network and Rallis India, Tejas Network slumps more than 5% after the company swings into loss, while Rallis is surging in trade after posting a strong Q1. Jasmeet joins in with more details. Jasmeet, what has worked and what didn't work for both the companies?
Well, right, thank you for that. Yes, Rallis India Q1 results are out. So what worked for the company is the revenue growth was led by strong volume across verticals of crop care, seed and oil. When it comes to the launches, the company launched 9 new crop protection products and 14 new seed products in this particular quarter, while the company maintains optimistic outlook for export recovery. Soil and plant the sector, health business sector, registered a growth of 33%, while the improved PAT margin due to the product mix and cost optimization. While when we look at Tejas Network, the key highlights for the company are reports lowest quarter revenue in last 2 financial years. Well, that's a negative. While the company's revenue led by delay in receipt of purchase order, which will be delayed for the coming quarters. Going forward, the order book stands at 1200 odd crores, while the revenue down by 87% at 202 crore versus that of 1500 odd crores. So this is about Tejas and Rallis Network. While the one more stock which is buzzing in trade today is Swaraj. It's up 5% in trade today on the account of earnings. Now, when you look at the earning numbers, the Q1 earning is up 15% when it comes to revenue, while EBITDA stands at 15 odd percentage, it's up, while margins are at 13.87, slightly muted, but still going well for the company. The net profit is up 16%. Now, what the company says is the company recorded the best ever volume growth for the engines and they recorded the highest ever PBT, while the stock also sees a strong demand in engines going forward, while the company also says that the sales growth of engines grew by 17.2%. So these are the stocks to watch out in trade today.
Thank you, Jasmeet, for the details. In fact, for Rallis India, we spoke to Gyanendra Shukla, who's the MD and CEO of the company, who said that 15 to 20% EBITDA margin is what he will be eyeing for. To listen in.
The kind of segments we operate, 15 to 20% is a typical EBITDA margin. And on long-term basis, that's where we want to move forward. Now, quarter to quarter, because products mix will change. Some quarters export will be higher, some quarters seed will be higher, some quarters crop care will be higher. So that will keep going up and down. But long-term basis, yes, we want to be in the industry benchmark rather than trailing behind the industry.
Well, Prashant, coming to Rallis first, MD did said that he wants to have a double-digit growth with 15 to 20% of EBITDA margin. Now, considering good volume growth that the company has shown, what is your long-term view when it comes to Rallis, and also can investor chip in now considering the upbeat in the stock? And the other stock that I wanted to discuss with you is, of course, Tejas Network, a bad set of numbers. What is your view when it comes to both of the stocks?
Obviously, yes. Rallis, obviously, the way how management has guided is a very optimistic number in terms of EBITDA margins. Historically, if you see, they have never done anything above 18% to 20%. So their outlook is very strong, but again, one has to wait and watch for quarter on quarter how they perform with respect to their mix in the products. Obviously, an agri-chemical sector can have a visibility of getting higher margins going forward as export also grows very faster in the current space. But for me, again, a wait and watch would be an advice, not to chip into this company immediately. We need to wait and watch every quarter on quarter and then look at the investment perspective. But currently, I think things are very good in terms of valuations. Also, very much comfortable to have a positive outlook, but not for a fresh buying at these levels. With respect to Tejas, again, obviously, yes, the numbers were very much surprisingly negative, and that has been underperforming from last many quarters. So I would like to have a wait and watch again with respect to their business model going forward. So overall, Tejas would be avoided at this point of time. Rallies can be wait and watch and buy more on dips.
And Prashant, also your view on Swaraj engines, because a good set of numbers that the company has shown, even stock is up 5% in trade.
Very strong in terms of fundamentals. I think with respect to their ROCs and ROEs, I'm very much comfortable to have this kind of premium valuation, despite there has been the outperforming in the price. If you see from April to till date, the stock has really outperformed the markets and that has delivered a great return. So again, fresh buying, I may not advise at this point of time, but again, those who are holding, continue to hold for long-term investments.
So that's on the back of earnings. But three companies that are in focus on the back of an order win, you have RVNL, RailTel and Power Mech. Let's quickly go ahead across to Vansh to understand what are the orders and how does it really work for these companies. Vansh, over to you.
Yeah, so firstly is the RVNL. So the company has received a letter of acceptance for an order worth rupees 447 crore from Delhi Metro Rail Corporation, and the execution timeline for the same is 3 years, and the order book for the company stands at 1 lakh crore as of March 2025. Second on the list is RailTel. Now the company has received orders worth rupees 260 crores from East Central Railway, and the order is for the provision of Kavach train. Now this is a collision avoidance system, and the execution timeline for the same is 2 years. The third one on the list is Power Mech projects. Now the company has received 2 orders. Firstly, they have secured order worth rupees 498 crore from SJVN Thermal, and the order is for the operation and maintenance of Buxar Thermal Power Project, and the execution timeline for the same is 39 months. Secondly, they have received an order of 43 crores from Jhabua Power. Now this is a JV of NTPC, and the order is for the operation and maintenance of boiler, turbine and generator, and the execution timeline for the same is 3 years with a provision of extension for 1 year. So these are the stocks that are to be kept in focus today.
Okay, so 3 stocks, Prashant, in terms of order wins, what would your bets be?
I think Power Mech as well as RailTel Corporation looks good at this point of time when we consider the fundamental ratios. Even the valuations are slightly better with respect to the growth factors, what these 2 companies are delivering on quarter-on-quarter basis. With respect to price performance, again, I think RailTel can be a best pick at this point of time, where still we expect some kind of price action momentum in the positive side. Overall, RailTel would be the first stock one should focus on, and second would be Power Mech.
Thank you for that view, Prashant. Well, fertilizer sector is in focus today after 3 companies have signed agreements with Saudi. Now, Indian Potash, Cribo and Coromandel have signed this agreement. They'll import 3.1 million tons of DAP, which is a kind of fertilizer. They're going to import this annually for 5 years from FY26. Now, the deal, this deal will significantly boost India's DAP supply from Saudi Arabia. Now, why this deal has been done? Because there's a key reason behind it. If you see, India wants to reduce the over-reliance on China, which is the primary driver, because we have a strategy to diversify the fertilizer import sources, because we are heavily import-driven when it comes to fertilizers. This agreement comes as China has halted specialty fertilizer exports to India for 2 months, and this forces India to find costlier alternatives from Europe, Russia and West Asia. And this agreement will help to stabilize and potential lead to lower cost over the longer period of time. If you see, India depends on China for about 80% of the specialty fertilizer imports, and that's one of the reasons why this deal has been signed. The stocks in focus though is Coromandel International, but all the fertilizer sector stocks are actually buzzing because of this positive deal that India has signed. Well, Prashant, let me come to you. We all know, so Rallis came out with the results today, good set of numbers, and Q1 is normally good for fertilizer sector as a whole. But what are your picks when it comes to the fertilizer sector, considering that China has halted the export of specialty fertilizers to India for 2 months?
Obviously, yes, the numbers are already discounted in the price. I think Q1 would be the best in time for any fertilizer companies to perform well in terms of their earnings. But again, for a long-term investors, I think one should again wait and watch for a better picture of once all these companies delivers their results. But time being, if you see on the valuation side, Chambal Fertilizers looks very good for me at this point of time, trading at a very cheaper valuation in terms of forward P of 10 and price to book value of almost 2. So considering the market cap and the ratios and the fundamental story with respect to the agriculture sector as well as the fertilizer sector, so I think Chambal can be a better pick for any investors to jump into and buy.
With regards to where the fertilizer pack goes so far. But moving on, you have Bank of Maharashtra, which has just reported numbers right now. You have your asset quality, which has remained absolutely flat on a sequential basis, and that's probably one of the reasons why you're seeing some bit of a spike that's coming in there, 1.5% higher. Profits have grown by around 23% at 1,593 odd crores. Gross NPAs have also remained flat. So that's with regards to where the first cut of Bank of Maharashtra goes. A smallish one, I mean, the market cap is around 43,000 to 44,000 odd crores in terms of where Bank of Maharashtra goes. Operating profit has seen an uptick of around 12% at 2,570 crores. Let's see if there is any provisioning number that has come in so far, but at least at the face of it, a good set of numbers. Let's just quickly pull up the intraday chart with regards to Bank of Maharashtra, because asset quality that has remained flat, which is a positive. So no major downtick coming in there. The provisioning number is what I'm looking at. Not sure if I have it so far. Nothing on the provisioning front yet, but a 12% growth in terms of operating profit and around a 25 to 26% growth in terms of the profitability is what you're picking up, and a marginal uptick coming in terms of Bank of Maharashtra. Prashant, a quick view with regards to the numbers that have just come in right now.
Yes, numbers are good, but I think it can be a better. But I would like to go with other PSU banks like Canara Bank. I'm waiting and watching for their numbers, as well as SBI. So in terms of valuations, again, Bank of Maharashtra is trading at a very premium valuations, as good as SBI again. So better to have a outlook on the SBI. But again, expected good numbers can be Bank of Baroda, Canara Bank, which can be a better pick at this point of time.
Yeah, and I think, one of the statements I'm just picking up right now is where they've continued to hold a provision of around 1,200 odd crores as contingency provision, and this is since COVID-19. So that number continues as well. But moving on, the quarterly, rebalancing of the MSCI Global Standard Index, where the cutoff period for selecting the stocks for the review begins today, which is on the 15th of July and will run until July 28th. Soumya joins us with more details in terms of what that review will indicate, which stocks will come in, what will go out. Soumya, over to you.
Well, yes, multiple stocks remain in focus given the fact that the cutoff date for MSCI stock selection has started from today, and this will last till July 20th, and MSCI will select any date from these dates for that cutoff. Now, this announcement of stocks that get selected or get removed or get moved from small cap to standard index, this announcement will come in on August 8th, and flows regarding the passive flows will come on August 26th. Now, which are the stocks that are expected to see a fresh inclusion in the list? The names like Swiggy, Vishal Mega Mart, Wari Energies, Mazgaon Dock and Hitachi Energy are among the high probable stocks that could get included in the MSCI Standard Index, and because of this inclusion, we could see inflows of anywhere between 169 to 201 million US dollars. Now, when it comes to stocks that could move from the small cap to the Standard Index, Coforge, Glenmark Pharma and Paytm have a high probability of moving from the small cap index to the Standard Index, and because of this move, there could be inflows of anywhere between 212 to 406 million US dollars, with the highest coming in for Coforge. So keep an eye out for Coforge. Stocks like Fortis Healthcare and G Vernova T&D have a high to medium probability of moving from the small cap index to the Standard Index, and if that happens, then there could be inflows of anywhere between 200 to 260 million US dollars. And stocks like Max Financial and Uno Minda have a medium to less probability of getting moved from the small cap index to the Standard Index. However, if it happens, there could be inflow of anywhere between 150 to 300 million US dollars. Now, two stocks that have a high probability of moving out of the Standard Index, and that is Sona BLW and Thermax, and if that happens, then there could be outflows of anywhere between 134 to 100 million US dollars. So keep an eye out for these stocks. Obviously, the final cutoff date is not yet decided and the list is yet to come, but these stocks would continue to remain in focus.
So Swiggy, Vishal Megamart, Worry, few of the names that will be interesting to watch out for. Thank you, Somit, for that. Prashant, what do you make of this expectation in terms of the MSCI rejig that could be in the cards? Because it's interesting names that we are watching out for. Swiggy, Vishal Megamart, Worry Energies, Mazgon Dock. In fact, Mazgon, there was a negative note recently on this one. Hitachi Energy as well. Your views?
Again, among these stocks, I think Vara Energy can be a better stock which can go into the MSCI Global Index with respect to valuations, with respect to the stock performance, and with respect to the industry leadership. I think that would be a better representative of the sector which they are focusing on. So Vara Energy would be a first preference which I am expecting on. Second would be again the VMM, the stock which was in the second in the list. So that would be the second stock where I am very much positive on in terms of earnings as well as on the outlook for the long-term holding. So Vishal Megamart as well as Vara Energy can be two stock which I am focusing more that can go into the MSCI index stocks.
Got that view, Prashant. Thank you for that. Well, moving on, Petroleum and Natural Oil Minister Hardeep Singh Puri was speaking at the inaugural session of the National Seminar on School Education in India, organized by Council for Social Development, wherein my colleague Aishwarya Patil caught up with him and asked about the ENP process. To listen in.
ENP ke baare, the two things you have to realize is it's very capital intensive, and it also entails a long gestation period. Now the fact that ONGC has dug over 500 wells in the recent past, which is the highest number in 37 years, and each well is very costly. In the case of Guyana, I keep repeating, they dug 47 wells. Each well cost offshore, it cost $100 million. And after 47, they found it. So ye कहना, somebody trolled me. I mean, I'm very happy getting trolled, especially when it's nonsensical. नहीं, आपने उस साल 2005 तक तो किया तो बंद कर दिया. अरे भाई 2005 तक अगर केंद्रीय सरकार नहीं करेगी कुछ और 10 साल का we had what we call the lost decade. So we have to now make up. So we have to make up for lost time, and therefore we are digging more wells. Look, I am only reporting to you the 18 wells on which, under our law, if somebody who's doing ENP finds some oil, they have to report to DGH. Agar usi ko dekh lo, that's where I get my confidence on. But you can't but persist. You have to continue the ENP, and the rest is history.
Okay, so that's an interesting take coming in there. Prashant, a quick view in terms of where oil and gas as a space goes, because the other aspect that we're considering is where Trump has come out and said that any allies with regards to Russia will see secondary tariffs, and that potentially is doubling in terms of the prices of oil over the next couple of months. How would you look at this space? What would you advise investors to do?
I think from last 3 to 6 months, we have seen how the oil and gas sector has underperformed due to this concern which you are raising right now. Obviously, yes, for a near term, for 1 to 6 months, I think there can be a hurdle with respect to oil and gas. But again, gas as a sector very much underperformed. I think valuation-wise, I think HFCL, BHEL, IOC looks very good at this point of time. Even government has no intention to reduce any prices in terms of petrol and diesel. So these three stocks, the OMC stocks, are very much in favor. Even dividend yields are higher. So I think one should focus more on the oil and gas. In gas sector, I think Petronet LNG can be a stock one should focus more on. Again, that sector is underperformed. Even GAIL has been the favorite of the industry, still not performing well despite having a good earnings show. But for me, again, oil and gas sector would be a sector for long-term investors, not for near-term, because near-term we know how the sector is so volatile.
Right, got that view. Thank you for that. Well, moving on, HDFC Life is expected to release its Q1 earnings today. Harsh joins in with more details. Harsh, what is the expectation that we have?
Well, yes, so the annual premium equivalent or the equivalent of top line is expected to grow 11% on a YOY basis as per NDTV Profit estimates. The number is expected to be around the 3,200 crore mark. When you're looking at the VNB, which is the value of new business, measure of profitability, that's expected to be around the 800 crore number and therefore arriving at a margin of around 25% odd when you're looking at the VNB margin number. So broadly, that's the estimate. Of course, a bit of a cool off when it comes to margins on a YOY basis as well as on a QOQ basis. But nonetheless, commentary around growth, commentary around product mix, commentary around how the regulations with regard to surrender value are getting digested and what the impact of that on this quarter's numbers are. All of those will be key monitorables.
Right. Thank you so much, Prashant, for all the thank you so much, Harsh, for all the details. Well, Prashant, let me come to you for HDFC Life. What are your expectations? How are you seeing Q1 to be shaping up?
I think again the numbers would be as similar as Q4 earnings. I'm not expecting any big jump in terms of their profitability as well as their new business margin. So when I see the price action, I think from last 3-4 days there may be some kind of very muted or a negative numbers in terms of Q1. I have seen numbers of Q1 for insurance companies will not so be attractive as Q4 would be the number where the sector will perform very well. So Q1 will be very much silent or muted. But the expectations are very much optimistic. But my expectation is I would like to see the stock to come down at least for another 20 to 30 rupees from the current level. So wait and watch. Don't get into the stock right now.
Right. Thank you so much for that view. Well, Prashant, please stay with us. Viewers, it's time for a quick short break. Do follow NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I hold IDFC for the long term?
Buy.
Markets trade in the green, Nifty about 25,200. All sectors in the positive. Auto and real estate lead the gains.
Tejas Network slips on Q1. While HCL Tech share falls more than 3% after Q1 earnings miss estimates, the company revises lower end of FY26 guidance from 2 to 5% earlier to 3 to 5%.
Meanwhile, passenger vehicle sales slipped more than 7% in June. SIAM data shows three-wheelers see 3% growth while two-wheelers tank 3.5%.
Well, India secures long-term DAP fertilizer supply from Saudi Arabia. Coromandel International Fertilizers and Chemicals, Transcorp and Chambal Fertilizers all buzz.
From California to BKC, Elon Musk's Tesla makes its long-awaited Indian debut with a swanky Mumbai showroom. Welcome back. You're watching Profit Buzzers on NDTV Profit. The markets seem to be seeing some strong moves, 0.5% up move in terms of Nifty 50, though we've cooled off from the day's highest levels, but that positive trend does continue. But moving on, it's a huge day for the Indian electric vehicle market, with three major global players making significant moves and intensifying the competition for global players. Let's get in Puneet with more details. Puneet, over to you.
Well, Tesla has come out and finally unveiled the prices of the Model Y in India. Those will be starting from 59.89 lakhs for the rear-wheel drive variant. They've also said that the long-range rear-wheel drive variant will be priced at roughly about 67.89 lakhs in India. So it's largely basis of the expectations that we had. But how does that compare to the other car makers within the space of 50 to 70 lakhs that offer an electric vehicle option? We'll also be looking at that aspect. But first, Tesla has launched an experience center right here in Mumbai, and they will be showcasing the Model Y to start with, at least for now. Apart from that, countries, India charges roughly about 70 to 100% import duty on completely built unit cars, and that's one of the key aspects of why the pricing compared to the US price is much higher. In the US, Tesla's Model Y is priced at roughly about $37,000. That translates to about 32 lakhs, but because of the 70% import duty from USA and around 70 to 100% import duty from other countries like China, the tax has hurt the prices to go above around 60 lakhs, at least in India, for the Model Y. When you look at some of the other launches, the VinFast is also launching, the Vietnam EV company is launching the VF6 as well as the VF7 in India today. That is expected to be priced between 25 to 30 lakhs based on the price that they have in Vietnam of 765 million dong. And we were also expecting the Kia to launch the Clavis EV in this year, today actually as well, and that will be priced at a much lower price, similar to around 20 to 25 lakhs as well. That's the EV variant of the Clavis EV. We've also seen some other car makers like the BYD being one of the key competitors for Tesla. The Sea Lion is priced at 48 lakhs, while something like a Volvo XC40, which is another premium EV, is priced at almost 49 lakh rupees. The Kia EV6, which is a much more premium variant, is priced at 65 lakhs, while we see the Mercedes-Benz EQA is also priced at 67 lakhs. So those are some of the key models that Tesla will be competing with. But nonetheless, it's a big win for the auto industry as well as for the consumers to now have Tesla in India.
Thank you so much for that, because this is actually intensifying the competition in the EV space as well for the domestic players. And you have M&M, which has been going absolutely huge in this space. In fact, as the showroom has opened today as well, my colleague Vishy spoke to Neeta Sarda, who's the architect at Trident Interior Designers, outside the store. Let's quickly listen into that conversation.
Nita, I wanted to ask you this question. What caught my eye is the color, because I don't think I have seen that in any of the images that I've seen of the Tesla stores. What do you have to say?
So yeah, purely white is purity, and I think anything stands way better on a white backdrop. That was the brief I got from them. In fact, we were supposed to do red and gray. We did work around with that theme, but I think finally what we ended up doing, the whites, have really worked out. The cars are outshining everything. The cars are still to be revealed, but once you see them, they will, they'll be the stars. So yes, every car showroom, we're not selling interiors, we're selling the cars. So I wanted that brief, and I worked around that, keeping a very minimalist look. The light boxes, they have got images from the, various Tesla, shoots that they have taken. We'll probably be having an Indian version also coming up in one of the light boxes. We're still working on that, which will give a very Indianized look. Even outside, if you notice from the sides, we've got light boxes, which will be displaying. And since we've got only Y model right now here, so it's all about Y right now, but in case they end up going for other models, you will be seeing the screen changing as well.
I wanted to ask you about your experience of setting up the store. Now, first of all, how long did it take for this store to actually pan out?
45. So I think, yeah, we worked around. So I was the chief architect, and the team Elegance has worked around with us to get my dream come true. So we have here Mr. Ashish as well, who's worked around with me. So it took about 45 days to complete the store. It was a complete day and night working. There was a lot of plug and play, so the furnitures were made at their factory, and multiple people working around. The signages was done by Amrish Neon with us. Of course, the complete thing was worked around with Elegance and JLL. I should say JLL has a team of experts who are on it and get the work going.
That's an interesting take coming in there with regards to how the showroom has been designed. But in fact, Vishy is actually breaking down everything you need to know about the Model Y launch, from pricing and variants to range, features, and what it means for India's EV landscape. Let's quickly listen into that.
All right, so we're right next to the latest Model Y that is launched today in India. Specifically, this is the Ultra Red. That is a very, very popular color for the Model Y and a very, very popular variant of the car. If you can see at the front, you will see these special light settings that they have done, which is original to the 2025. At the bottom, below the actually number plate, if you can see, there's a set of front-facing cameras which help you negotiate any kind of blind spot that might be there when you're driving. If you can come in a little further, this car comes in with a heavy set of features, including, of course, a large screen that is there at the front, over a 15-inch screen there, and then right behind the car, at the back of the car at this point in time, if you can see there, you can see a smaller set of smaller camera that's available. So that's there. That's the big one. The big screen at the front, which includes controls as well as entertainment, and at the back of the car is the smaller version, the smaller camera for the rear seat passengers. The boot of the car with over 2,000 liters of space right now available for the customers, which they can use, of course, to move their luggage as such.
That's a swanky looking red Tesla, the Y model that Vishy has been talking about. But let's quickly look at what Ola is doing in trade. You saw 16% up move on the back of earnings yesterday. It seems it's becoming a comeback quarter for Ola Electric. Today you're seeing profit booking 4.5% downtick in terms of the counter. Kotak Securities has maintained a sell on Ola. They have a target price of 30 rupees on the counter. You have Bank of America, which has underperformed. They have a target price of 45. And a Goldman Sachs, which has maintained a buy, and they have a target price of 63, which has been hiked from 60. So very mixed views, but the stock is under pressure on that one. And you have a Hero Moto, which is in focus as well in terms of today's session. Let's quickly pull up that counter on the screens, because what's happening with the Hero Moto is that it is the top gainer on Nifty 50s, trading at the day's highest levels with gains of 4.5% coming in there. This is because of their plans that they've unveiled in their annual report. They are looking to enter the European market in FY26. They will do this in the second quarter of FY26 is what they have said. FY26 will be a year to accelerate global growth as well as EV growth is what they've indicated. They're planning to expand electric mobility as well as the premium segment, and they're targeting value in core segments as well as a deeper global reach. With regards to where entry in the European market goes, they've said they will look at entering Germany, France, Spain and UK. And FY26 is going to be absolutely important from an international market perspective. They've built in FY25's 43% growth on the back of the global business. And the growth will be led by South Asia, Latin America demand. Talking about the electric vehicle focus, they've said their FY24 EV sales were up around 200%. And they've launched Vida V2 in sub 1 lakh rupees mass market, and their upcoming VX2 will boost the EV segment position as well. So two things, you know, the penetration in terms of EV as a segment and the importance in terms of EV as a segment that Hero Motor is talking about, and the expansion in terms of international markets, two things that is what is sending the stock to the day's highest levels. So that's with regards to where the entire auto pack goes. We're talking about EVs, you're talking about two-wheelers. Let me also get in a guest. We have, along with Prashant, we have Vinay Rajani also who joins in. Vinay, let me quickly come to you first. In terms of the listed space, if you have to look at two-wheelers, you have Ola, which is seeing a correction after a strong move yesterday, Hero Motor at the day's highest levels, and the auto pack firing on all engines. What would you advise investors to do with this space?
Yeah, so auto index is up by 1.6% today, and two-wheeler, as you said, that Hero MotoCorp is on the verge of a big breakout. For last 9 consecutive weeks, Hero MotoCorp was not able to cross 4,400 mark, and today it has gone up above 4,400 and has been sustaining. The important thing to note out is the volumes today. So volume has been significant, almost 12 lakh volume. It is on. If we were to take the average volume of 10 days, it is almost double than that. So price breakout is confirmed with the volume breakout as well. So I feel that the stock large cap two-wheeler space like Hero MotoCorp can do well from here. I think it is after the consolidation, it is ready for a up move, and I think overall it is headed for the much bigger target. The immediate resistance for the stock is around 4,800, and as far as support is concerned, I think support is there around 50 and 200 DMA, which coincide near the same level. So 4250 should be the range for the support, can be utilized as for the accumulation in the counter. But overall, I feel that in the auto space, there is a big development on the charts, which is the Hero MotoCorp, and the next resistance for the stock is seen at around 4,800.
4,800 in terms of Hero Motor. Prashant, how are you looking at the two-wheeler space from a fundamental perspective, and with the Tesla coming in, how big a competition is it going to be for your four-wheelers, SUVs in the EV space, which are domestic players?
Obviously, yes. I think today it would be called as a EV day. Tesla is in India. So EV as a sector, I think it will only expand the sector, not to get lot of competition. If you see today, Tata Motors as well as M&M, both are trading very much positive because of the price difference. Obviously, the highest price of Tata Motors or Mahindra was around 25 to 30 lakhs, and this guy is coming up with 60 lakhs an average price. So it will be very difficult for Tesla to penetrate Indian markets, and because it's very price sensitive, and Tesla is a very high-end car right now. So having one showroom at this point of time and penetrating full India would be a difficult task for Tesla. But for me, EV as a sector very positive, despite the pressure of all the concerns with respect to rare earth magnets and all. I think going forward, EV would be the growth factor for four-wheelers as well as the two-wheelers.
So that's going to be interesting to watch out for. In fact, let's quickly pull up a Yes Bank on the screens, because you have just news coming in on Bloomberg where Sumitomo Mitsui Financial Group, they may be eyeing a $1.1 billion additional investment in Yes Bank, on the back of which, if you see the stock at the day's highest levels, a strong spike coming in on that one. In fact, they've said that they're seeking to buy around 5% stake in Yes Bank from Carlyle as well as others. And they may also buy about $680 million in convertible bonds. That's the latest that we've been picking up in terms of where Sumitomo Mitsui Financial Group goes. Initially, we were talking about a 1.1 billion stake for a 1.1 billion dollar worth of stake for a 20% stake earlier. Those were the conversations that were going on. But currently, you're talking about an additional $1.1 billion stake, 5% in Yes Bank from Carlyle and others, and around $680 million in convertible bonds. A strong up move seen in terms of Yes Bank. Prashant, how are you looking at this news coming in on Bloomberg on the back of Sumitomo Mitsui Financial Group eyeing a $1.1 billion additional investment in Yes Bank?
I think the new promoter is trying to have a handhold position in the bank, and the market is expecting this will have a similar positive impact on the stock. But again, not for the immediate near-term support, but again for 3 to 6 months, I think they will raise their stake through all these stake buying activities. Very much positive on the stock. I think the new promoter or the new management will try to change all the dynamics of this business and grow it faster. So I think with respect to price and valuations, very much comfortable to have a good long-term buy at 20-21 rupees.
Thank you, Prashant, for that view. But next stock which we're going to focus is Suven Life Sciences, a 0-1 game. Now, why we are speaking about this stock is because the stock has doubled in the last 6 months, is up almost 17 to 18% in the last 1 month. Let's figure out, let's do a deep dive analysis, what is leading to this rally. Suven develops molecules which are focused on your CNS space, which treats your brain and spinal cord, and they develop novel therapies and owns global IP, also provide contract research services as well. Now, the key triggers for the recent stock move that you're seeing is, one of the reasons is the major fundraising of almost 857 crore in May 2025. But the interesting point here is the warrants were issued to promoters and the investors like Quant Mutual Fund and Abacus Diversified Alpha Fund. So one of the key reasons why you're seeing a huge up move in the stock. The capital has been earmarked for the CNS pipeline that the company has been eyeing to, and the stock is up 80% since fundraise. Now let's see why investors are bullish on this company despite company making huge losses, and you never know, for the next 2 to 3 years company may continue making losses. Now if I were to talk about in FY23, the loss was almost 118 crore, which jumped to almost 161 crore of loss in FY25. But still, the stock is doubled in last 6 months. Why? Now, do you remember the lead asset? Now, if you see the walk hard, the stock has been given multiple returns to investors because of the lead asset Zenith by Walkhard. Even few days back, we had a lead asset by Glenmark Pharma also, that is ISB 2001, which is a lead asset which led to huge returns for Glenmark also. Maybe the Suven's Alzheimer's drug would be the lead asset for Suven Life Sciences, and this is one of the reasons why investors are bullish on this, because if this comes through, this may be a multi-billion opportunity. Let's see the key pipelines that the Suven has. One is their Alzheimer drug, which is the drug is being developed for agitation in Alzheimer's patients, currently in phase 3 global trials. The data readouts is expected in in 2026 or 2027, and this represents a multi-billion dollar opportunity for Suven Life Sciences. The other few drugs which are in pipeline is, one is chronic neurological disorder, which is engaged in FDA for phase 3 trial, and the data from phase 3 is expected in 2027. Then you have cognitive disorder, also the data is expected around July 2025. Even for major depressive disorder, also the results are expected for early 2027. They have completed phase 2 trial for this drug. Talking about the R&D pipeline, so these are the key assets where Suven is betting huge, and that's one of the reasons why they did 857 crore of fundraise, and people are betting on these drugs. Now, talking about the R&D pipeline and outlook, if you see, success in even one of the licensing product could mean significant revenue and could change Suven Life Sciences into other company. More capital will be needed for multiple clinical trials over the next 2 years, so we may see, more funding accepted by the SUVN Life Sciences. Lastly, if you see, SUVN is into CNS agreement, which is, which fails the most. It's a notorious difficult segment to be in, but SUVN is betting on the CNS pipeline, and the Alzheimer's drug is one of the reasons why investors are bullish on this SUVN Life Sciences. Well, on this, Prashant, let me come to you. How are you tracking SUVN Life Sciences? Because people or other investors are very bullish considering the huge pipeline that the company has.
Yes, obviously, yes. Who will miss this company? From last 2 months, the stock has been buzzing, and there are a lot of questions on this company. You rightly pointed out with respect to the fundraising, which triggered the stock for a very optimistic outlook for very 1 or 2 years. The Alzheimer product is obviously right. It is a multi-billion-dollar business opportunity. If something goes really very well, the stock can even still go higher from the current levels. Overall, very much bullish. But again, with respect to price action, the stock has almost doubled from the recent lows. So that would be a very cautious for a fresh investors to get into the stock. So overall, we have to wait and watch and buy more on the dips, not at the current levels.
Not at current levels, buy on dip should be the strategy. I think it's an opportunity miss so far. But Varsha, great details that you've got for the viewers as well. With that, you have Sun Pharma and Aurobindo, both are in focus as well. Again, in terms of Sun Pharma, that stock is up on the back of a patent that they have received on the launch of a hair loss drug in the US. 2.5% up move is what you're seeing in terms of Sun Pharma. In fact, Morgan Stanley has a target price of 1,960 and they've maintained an overweight. And they're expecting the launch in the second half of the year, and that will support the overweight thesis. And Aurobindo Pharma as well, what they've said is they're looking to make long-acting HIV injectable, and this will be licensed by MPP for around 133 countries, and they will expand global access in public and private sector. All the three stocks, Vinay, let me come to you. What would you advise investors to do with the SUVN Life, Sun Pharma, as well as Aurobindo Pharma?
Yeah, so SUVN Life is suggested by the other analysts that it has risen a lot. It has been a fifth consecutive month when we have seen a continuous rise in the stock. So at lower level, one can look at 250, 260 is the level one can look at for the SUVN Life Sciences. So right now 298. So buy on dip should be the view. 250 to 260 is a good support zone where one can look at. As far as Sun Pharma is concerned, it looks like that it has given a fresh breakout from the consolidation which was going on for last many weeks, and it is a fresh move. Stock has surpassed the 50 and 200 days exponential averages, and the overall healthcare and pharma sector has been performing well. And this is a large cap pharma space where we have got good safety also. So it looks like that Sun Pharma is looking good as compared to Aurobindo Pharma because it is taking lead, and on the technical parameter it is giving higher ratings than Aurobindo. So I would go with the Sun Pharma as compared to Aurobindo. 1725 is the level. The next resistance for the stock is around 1800, whereas the next immediate swing high resistance is there. So 1800 should be the short term target. As far as support is concerned, I think 1650 should be the strong base for the counter. So Sun Pharma is looking stronger on the charts.
Okay, so that's with regards to where Sun Pharma goes. That's the view coming in there. But coming back to the auto space, as the SIAM June monthly data is released in an exclusive conversation, my colleague Puneet spoke to Shailesh Chandra, president at SIAM, about his outlook for the year ahead, from easing two-wheeler financing to the resilience of premium vehicles. He also weighs in on rare earth magnets, rural demand revival, and the structural shift towards utility vehicles. Let's quickly listen into that conversation.
Q1 has been tough. What is the expectations for FY26? Will it be a similar year compared to the last year, where leading up to the festive season is where the expectations start to build up? And how will you be looking at the challenge for all the automakers post-festive season? Because we saw a very big blip after that, a sudden drop in sales for the next 2 to 3 months. So what is the expectations of guidance essentially in growth for CM for this year? And how would you expect that this will be a year where it'll again be a year of festive season growth, determining the growth for the whole year?
Yeah, so see, Q1 is a seasonal, demand slowdown that we see, and so would be Q2 also. But generally speaking, the inertia or momentum of whatever you say, slowdown momentum of FY25 has continued in Q1 because the growth rates are less. Slight decline in certain segments that we have seen. Different categories are in very different situations. So, for example, two-wheeler category, while we saw the offtake decline of about 6% or so, that was primarily on account of stock correction that certain OEMs in two-wheeler category had gone for. But the retail was still strong, above 5%. So I still believe that two-wheeler, which ended the last financial year very strong with double-digit growth, might not see a double-digit growth, but should be upwards of 5% is the way I see. As far as commercial vehicle is concerned, where for a long period of time it has been kind of flattish to very low growth rates, slight decline only that we have seen this quarter, is heavily dependent on replacement demand in most of the sub-segments that we see. And also, passenger vehicle has also seen the seasonality impact of Q1, but it has also kind of declined from a wholesale perspective, but slightly positive in the positive territory as far as registrations are concerned. Broadly, I see that the factors which can help make the industry do better are some of the macro factors like the repo rate 100 bips reduction which has happened in the past several months. Then you have the monsoon, which is hopefully going to be strong, and therefore that should boost the rural sentiment also. And some of the measures taken by government, like income tax, has been brought down and all. I think these will be the boosters for commercial vehicle segment, especially the infra spending will also be an added advantage. And overall vehicle financing, easing out a bit. All these will be factors which can help the industry possibly do better than as we see the industry today as we are standing in.
So that's the word coming in, and there is weakness in terms of where the first quarter of FY26 goes for the auto space as a whole. But completely out of time, but that it's a wrap on this edition of Profit Buzzers. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold IDFC for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, if you look at the markets, Nifty has finally broken its losing streak. It has tapped its 4-day losing streak and is up around 0.5% in trade.
Absolutely. It's a sea of green that we are looking at in trade today. Finally, we are seeing some bit of positive momentum in terms of where the benchmark indices are headed. We are looking at gains of over 0.4% currently. So that's in terms of Nifty 50. Nifty Bank also, if you are seeing, that is holding up as well. We are looking at gains of over 0.4% here as well. In terms of the point contribution table, it's the banks which are in focus particularly. HDFC Bank right at the top in the point contribution table that we are seeing. Infosys, Sun Pharma, other stocks in focus. In Pharma also had some news development because of which it is passing in trade, while what is not working out so well is something like a HCL Tech. This is the result impact that we are seeing. Eternal, again, yesterday we saw strong up moves in this counter on the back of a brokerage note, seeing some bit of profit booking over there. Axis Bank and Kotak Bank also in red is what we are seeing. Now this is in terms of the benchmark indices that we are looking at. Let's take a look at the sectoral indices as well. If you are looking overall, everything is in the green is what we are seeing. Nifty Auto right at the top, seeing gains of over 1.3%. Nifty Healthcare also up over 1%. Pharma doing particularly well. It's only the Nifty Metal counter which is flat in red is what we are looking at. So this is the sectoral picture that we are seeing. In terms of the broader markets, they are outperforming the benchmark indices as well. In terms of Nifty Mid Cap 150, so up over 0.7%, while Nifty Small Cap 250, if you are looking at, that's seeing gains of over 0.8%. In fact, let's see BSE 500 to take a look at some of the top passing stocks in focus today. Right at the top, we have Sterlite. It's up over 8% in trade. Midhani as well, up over 8%. Arti Drugs, some Arti Drugs, Aether, some of Sobha, some of these other counters seeing gains of over 5 to 7%. Well, what is not working out so well is something like a Tejas Networks, and this is another earnings impact that we are looking at. The stock down by about 6%. CE Info Systems, Credit Access also seeing cuts of over 1%. Our financials down about 1.8% as well. So, Samit, this is the overall picture that we are seeing in terms of where the broader market and the benchmark indices are concerned. But you know, I want to also address something like a SPML Infra now particularly. Now, this is in focus on the back of recent order wins. The stock, in fact, is up over 8% in trade today. It has a couple of recent order wins as well. It received a 385 crore of project for its water production and supply system in Rajasthan is what we are seeing. In fact, even if we look at this is in contrast to the FY25 performance that we had seen, wherein the revenue was down about 41%, while margins were at 6%. So we'll get perspective in terms with the management on what the outlook for FY26 is, considering that we have a low base and they're seeing about a 50% of a growth here. Well, order book positioning, if we look at that, stood at 3,000 crore with a book-to-bill ratio of 4x. Bidding tender at 9,000 crore is what we are looking at. What is interesting is their battery energy storage system vertical, in which now they're setting up a manufacturing facility as well, and they expect a significant mix from this vertical going forward. But to discuss more about the business outlook and the strategy forward, we are in fact joined by Abhinandan Sethi, the CEO of SPML Infra. First of all, Mr. Sethi, welcome to the show. I want to get your sense. Now, you've had a couple of order wins in particular, but last year, if you see FY25 in particular, there had been a couple of headwinds. This included the likes of Jal Jeevan Mission project delays as well. So just want to get your sense on how the order book is currently faring at what is the kind of inflows that you're projecting for this year.
Thank you. Thank you for having me on the show. Last year, we had faced a temporary blip. It was because of the Jal Jeevan Mission needing to be extended by the central government, and you also due to the elections. But all of that is done now, and we are now again seeing full traction in the Jal Jeevan Mission as well as all the other programs of the government of India, especially the river linking projects. There's a lot of traction, a lot of tenders that are coming up, and we are bidding very actively. Our order book currently is at 3250 crores. We are L1 in about 2700 crores, and we expect to fructify all these L1s in the second quarter itself.
And the order book of 3,250 crore, can you give us a breakup of how much of these orders are legacy orders and how much of these orders are new orders? Because I believe for new orders, the margins are on the higher side, right?
Correct, sir. So our order book from the newer orders right now is about 700 crores, and they will increase as we get more and more new orders, which we are expecting starting from this month. We have already seen one coming in, and we see the balance of 2,700 crores hopefully to fructify in second quarter.
Right.
Okay, so considering that, what is the kind of margin picture that we should be building from FY26 onwards in terms of where the margins are concerned? Because I just want a sustainable range. This is also on the back of the other vertical also coming in picture, wherein they have a 15% of a mix. So overall picture in terms of where the margin trajectory is.
Our EBITDA would be at about 10 to 12%.
That is the blended margin that we are looking at. Yeah, please go on.
We are looking at an EBITDA of about 10 to 12% for our entire revenue fold. The new orders that the water will give will come around 15%, with the older orders being at about 8 to 9%. And as we start to build them, we will have a blended margin of about 10 to 12% for the year.
Okay, and of this current order book that we are looking at, how much of it is executable in this particular year? Also, you have around a 9,000 crore of an opportunity in terms of where the bidding pipeline is considered. So what is usually the success rate considering the competition which is also there?
So from the tenders that we have participated, our hit ratio is about 20 to 25%. We expect to convert them in this year once these tenders open. The outlook is very large. As I said, since Jal Jeevan Mission has reopened and has been extended, we are expecting to bid in high quantities in the next few quarters. We are seeing a lot of traction even in the power substation segment. Obviously, in our new segment, battery energy storage segment, also there is a lot of traction. We are looking at having an order book closing this year of about 5,000 crores.
Right, sir. Sorry, we missed asking you this. You did give us a margin guidance, but after the weak FY25, for FY26, what is the kind of growth are you looking at for revenue and net profit?
We are looking at a sustainable growth for this year. It could be in the range of about 30% plus on the top line as well as on the bottom line.
Right. And the BESS manufacturing plant, the capital expenditure regarding which is ongoing. Could you explain to us what is how much capex are you planning to spend here, and how will this plant benefit the company?
So battery energy storage system is something that we are very, very bullish on. We understand that for India's dream to work on renewable power, battery energy storage system is the heart of it. For us to have all the power across the clock, we need the battery energy storage segment to perform and perform very well. We are already seeing a lot of traction in the battery energy storage segment. We did a recent tie-up with Energy Vault, a US listed company, where we have got a transfer of technology from them for our battery energy storage division. We are going to get the entire technology, the technical know-how, and they are going to handhold us till we are able to deliver these equipments on site and also operate and manage them. We are looking to invest about 175 crores into this segment. We have already started our investment. We have done the tie-up. We have bought the land. The work has started on the ground, and we expect to complete construction and be ready to sell in Q1 2026.
Okay.
Financial year 2026.
Okay, so from FY26, will we see more of these revenues coming from this vertical? And also, once these facilities scales up, what is the kind of capacity utilization levels that we should be watching out for?
So we have a phased-wise plan. In our first phase, we are doing a 2.5 gigawatt hour plant, and then we will scale this up to 5 gigawatt hours. And we have larger plans, but as we are successful, we will deploy more and more into this segment. We can expect orders to start flowing in towards the end of this financial year and start production and start selling in the next year. Our goal is that we have healthy power should have a healthy flow from our order book. Maybe to start with, it should be 75-25 and going up to 50-50 as we move forward between water and power.
Okay, so 50-50 is the mix that you're looking at. So once you have this mix, what would be the margin picture? Then would we see an improvement in terms of where the margins are concerned? And also the overall revenue picture that we can build in the next 2 to 3 years coming from this vertical?
So just to tell you, a 2.5 gigawatt hour plant will give you about a revenue of 2,500 crores, and a 5 gigawatt will give you a revenue of about 5,000 crores as we move forward. So we are looking at a very healthy growth going forward. We are very determined to be successful in this field, as well as obviously our legacy business, which is water. And we are seeing a lot of traction, and we can expect a great next 2 to 3 years.
Right, sir, and quickly, if you could share some updates regarding the settlement with NARCL.
We have already settled our debt. It was capped at 700 crores. We have already made a substantial payment of about 300 crores. We are left with 400 crores to be paid over the next 6 years. We have arbitration claims of about 4,500 crores and arbitration awards of about 622 crores. And we are very confident that all of these awards and claims will fructify into payment to NARCL, and we will have no operational cash outflow.
Okay, thank you, Mr. Sethi, for joining and sharing that perspective on the outlook forward for the company. So it's the BESS vertical that we should be watching out for, SPML Infra. But let me welcome in Avinash to discuss more about this company and also some other companies that we'll discuss later on. Avinash, do you track SPML Infra? What do you think about this one?
No, I think, Anushi, the fourth quarter performance was quite good. I think on an annual basis also, the company made a profit of roughly about 46 crores. So there's a good bounce back. But one or two key observations are that, the operating profitability still continues to be weak. If you see the other income this year, other income was 54 crores. And if you see their operating cash flows, they still continue to be operating cash flow negative. So I think, on both these fronts, the market would observe these two data points very closely. I think how they execute the orders, how fast they execute it, and from the battery energy system, what kind of business can they generate in the next couple of years? Because that is a promising business. But I think on the working capital side, the management needs to pull up and actually deliver better kind of operating metrics. Only then you could see a further kind of re-rating, because the stock has moved up from a lower base. And I think going forward, it's going to be the quarterly performance, the execution, and obviously how they manage their working capital.
Right. Ashapura Mine is another stock that remains in focus. It's up 10% in trade today, and in the last 1 month, the stock has gained more than 35%. What's been buzzing here? Let's get in Vansh with more details.
Yeah, so firstly, let's understand the business of the company. So company is involved in mining and manufacturing with some trading activities. So with respect to mining, company is a significant mine owner and operator, particularly for bentonite and bauxite. Company has extensive reserves in India and other countries. And with respect to manufacturing, company operates manufacturing plants and convert their raw materials into value-added products. If you look at the financials of the company, the 3-year revenue CAGR stands at 29% and the 3-year profit CAGR stands at 49%. So clearly the stock stands out in terms of financial front. Now if you talk about the products that the company has in its portfolio, Bleaching earth accounts for 28% of the company's revenue, and bentonite accounts for 48% of the company's revenue in FY25. However, and bauxite accounts for 9% of the company's revenue. Just for the viewers to understand, bentonite is used for forming iron pellets, which is further used in the steel industry, and bauxite is a raw material for making alumina. Now, if we talk about the key benefits to the company, now as we all know, there have been concerns regarding the supply of bauxite from Geneva due to the strict norms by the Genevan government. Now, the company has 2 subsidiaries which are having long-term contracts for bauxite and iron ore from Geneva, and the company has finished building a new port in Geneva, they further aim for higher bauxite exports from Geneva, and they have existing facility in Geneva which is well positioned to capitalize from these emerging opportunities. So clearly the stock stands out on all the fronts.
Right. Avinash, coming to you on Ashapura mine, have you tracked this counter? What's been buzzing? The stock is up 37% in the last 1 month, and at this juncture, would you advise investors to go ahead and buy this counter?
I think, Soumit, this is an interesting company because, in terms of their profits, in terms of their operating cash flows, the kind of product they make is quite unique and they've been delivering. But one thing which, has seen the stock go up significantly is because of a recent tax order win. In fact, something like 259 crores, which the income tax department had levied on them has now been rolled back. And that amount, according to the company in their press release, has been clearly stated that can be used for future, profitable, operations. So it means that going forward, they have a significant tax shield. At least for the next 2 years, hopefully, they don't have to pay any tax, which means the PBT and the profit after tax would be similar. So I think on declines, definitely this could be an interesting bet because the stock has run up pretty sharply from lower levels. But yes, in the near term, at least for the next 12 to 15 months, we are quite positive and constructive on the stock.
Okay, so it's a positive view that we are seeing for Ashapura Mines. So stock up over 10% in trade today. But another stock in focus is Bajaj Healthcare, and this is after the company has undertaken CDMO projects for intermediaries and APIs for its international clients. Varsha joins in with more details.
Yeah, thank you for that. So, if you see the chart for Bajaj Healthcare, the stock has gained so much. Now, this is on the back of especially on the back of the CDMO segment that the company is being, eyeing on. Let's see what that company does. So, they manufacture API and formulations, and they also provide CDMO services. So, they undertake CDMO projects for intermediates and APIs. That is a key salt in any medicine. They take this for international clients, and they recently entered for CDMO agreement with US, UK based, EU and UK based customers for the supply of 15 APIs. This involves exclusive manufacturing for these APIs for these clients. Speaking about the manufacturing facilities, so they have multiple manufacturing facilities which are designed to meet stringent global regulatory requirements. And onto the recent developments and the outlook, what lies ahead when it comes to Bajaj Healthcare. They are planning to launch new product lines. One is that, and they are also continuing to receive approvals from global regulatory bodies like TGA. And lastly, if you see the very important segment of all of the Bajaj Healthcare is the CDMO, which these agreements highlights their push into contract manufacturing, which can provide stable revenue streams over the long period of time. So overall, the CDMO into intermediates and APIs is what making this stock buzz.
Okay, so that's the view that we are seeing for Bajaj Healthcare. But before we go to Avinash for his view, let's quickly address ICICI Prudential, which is flashing on the screen below. Now we are looking at a net premium income growth of over 8% right now. In fact, net profit also saw about a 34% of a growth, and this is on a year-on-year basis that we are doing this comparison. Persistency ratio, if you are looking at, that stood at 80.8%. Now this is an improvement from 78.3% that we are looking from the last quarter. At 61 first month, if you are looking at, that is also seen an improvement. Solvency ratio stood at 212.3%. ICICI Prudential, if you're looking at the current stock price movement, it's up over 2% on the back of this result impact that we're seeing. But Avinash, coming to you on this, let's firstly address the ICICI Prudential numbers as well. And Varsha, she just spoke about Bajaj Healthcare, so your view on that stock?
No, I think Anushi, ICICI Pro numbers seem to be much better than what the street had expected. See, because normally the January to March quarter is supposed to be a bumper quarter for insurance companies, but April to June has been pretty solid. And I think, obviously once the conference call is done, we get to know the management commentary. We'll get to know what are the kind of targets and the kind of growth numbers and the market feel which the company has been witnessing. So I think net, on the face of it, persistency ratio going up to 80%, PAT up by 34% on a YOY basis is definitely much better than street expectation. I think the stock should gradually move up because these numbers are much better than what the overall consensus was. As far as Bajaj Healthcare is concerned, they are gradually migrating to a higher value-added kind of business from APIs and formulations to CDMO. And I think they have well-regulated and well-established facilities, and plus, they've got good orders in hand. So typically, I think, this company is now going to be gradually re-rated. Already the stock has been in the limelight, but I think once numbers from the CDMO project start flowing in, the revenue and the profitability, which obviously should come in the second half of this financial year, you could see a further re-rating in the stock. So definitely within the mid-cap pharma basket, I think it looks promising. I think one needs to take a medium-term view here.
Right. Another stock that has been buzzing in trade is Spandana Sphoorty. The stock has surged 12% in just 2 trading sessions. In fact, it's up over 8% in trade today. What is the reason, or what could be the reason behind this kind of a move in Spandana Sphoorty? Let's get in Harsh with more details on the same.
Well, first off, Somit, there's just a good tailwind with regard to microfinance, right? So some of these stocks just recovering from that good tailwind, and the bases are slightly low in terms of the stocks broadly sector-wide are quite beaten down. Now, when I'm looking at Spandana in particular, the only recent news that we could come up with is the fact that there's going to be an equity raise today. And does it require equity capital? Not really. Capital adequacy is currently sitting at a very healthy 37.1% at the end of March. The AUM is in fact contracted sharply. The disbursements are also down for Q4. And the number of customers also have shrunk. So all of those metrics pointing at a shrinking business. But if the cycle were to revive, you could start to see growth come back. So maybe this is just a positive sentiment coming through on the back of the fact that there is a fundraise. That's one. And secondly, that could lead to a positive tailwind in terms of the cycle turning as well. So some of those factors likely playing out on the stock.
Right. Avinash, coming to you, do you also believe that it's the positive sentiment of a cycle turning is what has been leading to this rally in the share prices of Spandana?
Yeah, I think, basically most of the companies like Grameen Credit as well as Credit Access as well as, Spandana Sphoorty, I think the worst seems to have been, completed. And I think probably from the second half of this financial year, Somit, you will probably see a better number, in terms of asset quality, in terms of disbursements. I think clearly, these companies have been beaten down very badly from their 52-week highs. And that is probably another reason why you're seeing a sharp jump in their stock prices. Of course, the fundraising news is also another element, because typically you see a lot of action ahead of the news of, whenever any company raises money. But I think clearly the bigger picture and the positive picture could realize, post September. I think maybe the second quarter could be a moderately better quarter compared to the quarter one. But the post second half of this financial year could be much better. And I think microfinance is a very large opportunity in a country like India. So I think if they keep their financials okay, asset quality under control, I think definitely at these levels, there's very little, nothing to lose. So definitely from a longer term perspective, Spandana Sphoorty can definitely be accumulated.
Well, thank you, Avinash. Thank you for joining us in this show and giving us your view on the stocks that we discussed. Well, with that, it's a wrap on this edition of Top Trades. Stay tuned and keep watching NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IDFC for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. Let's look at where the Nifty is at. Of course, it's a good day of trade today, so 0.5% higher. Some bit of zing on the Nifty. 25,200 is what we're now looking at, where the Nifty 50 is concerned. So a good decent uptick over the last 24 hours or so since we saw the markets recover a bit yesterday and thereafter getting a bit of a leg up today as well. The Bank Nifty also in fair fettle. It's doing fairly well for itself. We're definitely off the day's lows, just about off the day's high. The 25,245 mark, just about 50 points to 60 points away from that high point of the day. But a near 100-point recovery from the low point of the day. That's the big positive. Now let's look at the heat map on the Nifty and let's see what's happening, especially with regard to IT, because HCL Tech was the big earnings, which is what has taken that particular counter a little bit on the back foot. 3% lower on an HCL Tech. And then you have those life insurers, both of those in focus because HDFC Life will come out with numbers as well. But Kotak, Axis, so some bit of tepidness seen on some of the banks as well. So financials, banks, some tepidness, but outside of that, you're seeing a solid coat of green across the board. You're seeing a % high on some of the heavyweights like an HDFC. Some of the auto stocks showing some real zing. And then there's Sun Pharma sitting pretty right at the top along with a Hero Moto. Both of those doing fairly well for themselves. So auto is taking a bit of a front seat today. Along with it is Pharma as well, doing decently well. Let's look at sectors and maybe that's the texture we'll see. There you go, auto, Pharma, the top two gainers. Along with it, you're seeing PSU banks also pull up a bit of a punch. So that pocket doing well. What's not doing well is perhaps a metal index, just about slight negative bias, but absolutely flat, frankly. I would classify this as a solid coat of green across sectors as well, because the PSU index and the metal index are losing by just about 0.06%. So that's really nothing, frankly, but that's how it's playing out. Now let's look at the advanced decline overall, and on the exchange, you're seeing a good breadth, as would be the case on a day like this. The mid cap and small cap indices also doing well. The outperformance there seems to continue. They're building on the gains from yesterday as well. Mind you, they were in the green yesterday when for a predominant part of the day, the Nifty 50 was in the red at least. So let's pull up the Nifty mid cap and small cap indices and see how that outperformance is shining. 0.7% higher on the Nifty mid cap. Fairly okay range bound kind of a day. And the Nifty small cap too doing fairly well for itself. 0.8% higher on the Nifty small cap. Some buzzers, let's pull up the BSE 500, top gainers, top losers. Those are some names and we'll cover some of those along with our big bull versus bear as well as stock of the day, which is obviously going to be Hero and Sun Pharma. And so we'll cover both of those as well through the next hour and a half and give you better perspective. But those are some big buzzers, some names. Tejas Networks is one of those which is not doing well on the back of numbers. Mind you, results are now starting to trickle through, and very soon we'll start seeing them thick and fast. So we'll obviously have good perspective with regard to numbers as well. But Neeraj, what are you seeing? What's standing out for you?
Yeah, well, a very quick look firstly at the stocks which were the big movers in trade yesterday, and just trying and seeing if they're active today or no. So Newland Labs should come up on your screen. We should try and get Anand on the screen. So Newland adds another 2.5%, by the way, 386 and counting. So that one is doing well. Anand Rathi Wealth, not so much. Down about 3%, unfortunately for itself. So that has come off a little bit. Ola Electric is the other one that we should try and pull up. Big move in trade yesterday. Is it continuing from where it left off yesterday? No. So, well, both in the case of Anand Rathi and Ola Electric, the luck is not the same as Newland. By the way, speaking of Newland, pharmaceuticals, what's happening to a Laurus Labs, what's happening to a Divi's and a Wockhardt, all three should come up on your screen just to see whether pharma is having maybe a slightly dull day relative to what was the case in trade yesterday. In fact, a lot of stocks which had done very well are coming off today. So JP Power, for example, is the top loser, down about 7.5% today. Inox swinged to 2.5%. Tejas, as a result of the results being weak, is down about 6.5% as well, Tejas Network. So that is looking slightly wobbly too in the session. And of course, on the gaining side, then you would have a few others which would stand out. But without much ado, let's get in Kush Bora to try and understand how does he see the charts today. Kush, good having you. Thanks for joining in. Not a bad day of trade, Kush, 1/3%. You can argue in some fashion that it's held out for the better part of the day today.
Hi, Neeraj. First, very good afternoon to you and to the viewers. Indeed. In fact, I think green shoots for this were showing yesterday as well. And the reason I say that is because if you see the two sessions prior to that, Nifty did close at the low point of the day. Yesterday, we bounced off. The sectoral breakthrough was extremely positive with a lot of sectors, ending higher. So the green shoots were there yesterday. 25,000, is a psychologically important mark, has a strong put base as well. But also the 50-day moving average support near 24,975 kicked in, and we're seeing a rebound from here. And as I've been maintaining, the market seemed to be acting a little against, the data, where the PCR was low, the VIX was low, and we were still sliding lower. So a rebound was, around the corner. Always difficult to pinpoint from which level and on which day it might come about. but better to stay on the long side, of this market. Now with this kind of a move, I think we have a very clear stop loss in place, which is just under the 25,000 mark. So 24,950, 24,900 is where you place that stop loss. You play for a long trade on the Nifty. What's also happened is that 25,100 was seeing a good writing, on the call side for this weekly expiry. That seems to have shifted higher to 25,200, 25,300 zones. So the first key resistance level will be the 20-day moving average near the 25,300 mark. But the texture mildly, turning bullish after 4 sessions of fall. I would still bet on the long side. 24,900, 950 is where you place that stop loss and continue holding on to long positions. If you didn't have one, not a bad idea to create some now.
Okay. What about ideas for the afternoon, Kush?
Just still going, with both the long, both trends on the long side. The first one is 197 Communications, PTM. Extremely good accumulation over the last 3 sessions. Today also the volume have picked up, the price action also seeing a good uptick, relative strength apparent with the kind of moves that it's made against the market trend. So on the upside, 1,000, 1,025 are your targets. 970 is where you place the stop loss. The second one is Prestige Estates. Mind you, this has come off the high points of the day, relatively closer to the stop loss, but with the kind of price action and the accumulation that we've seen over the last 4 days, it still remains, a fairly bullish call. So the targets on this one are 1785, 1825. The stop loss for this one is close to 1700, but because of the volatility, if you want to push it, you can keep it to 1685 levels. But as I said, the price and the volume action for the last 3 to 4 sessions has been very interesting on both 197, that is Paytm, and Prestige Estates.
Are you positive overall real estate as well, Kush, or is it just Prestige?
First, very selectively, while real estate has had days where it shot up and then gone in for a round of profit booking, I don't think there is any particular sector where I remain constructive, like a blanket trade. You have to be very selective, even in sectors which I'm constructive on, say cement. You've got a couple of stocks which are doing well. The rest of the pack, maybe chipping in on some days and then not doing so great. Same thing applies for real estate. Valor Estate and not DLF. Valor Estate has been one of our picks. Marathon has been one more pick. So as and when the trends show some kind of reversal or positive action, do we pick out stocks? So Prestige is showing that now. So I would be selective in some of these names, not a blanket trade on all of them.
How would you view auto, Kush, in all that's happening? Because there's just so much buzz around auto today in particular. Do you believe that this cyclical trade of sorts, where each sector comes to the fore, makes its gains, goes away, is it time for auto to come back? I know you're not betting on themes, but names.
So here you could consider a positional play. Look at something like a Mahindra and Mahindra. It's been consolidating. Even the dips have been near those 2,900, 3,000 odd support levels. Look at a TVS Motor. It's had its day in the sun, then came into profit booking, and 2,700 support zone acting up yet again. So I would be a positional buyer, stock specific, in Mahindra and Mahindra, TVS Motor, but the momentum seems to be missing. There is a lack of follow through in some of these names. So while yes, for one reason or another, there is momentum in the auto space today, I wouldn't count on a trend reversal unless I see most of these stocks taking out resistance zones, those supply zones. So I would be constructive, but on a more positional basis rather than an immediate trade.
Okay, all right. What's your view on an eternal Kush?
Very positive. It's had a long period of consolidation. In fact, the good part of this year has gone into consolidation on that 200 to 240 band. Now that 240 level has been taken out, and convincingly, the stocks actually rather traded above that for a good part of the last month and a half, 2 months. We've seen a golden crossover of the 20 and the 200-day moving average. Now you're seeing the 50-day moving average crossover above the 200-day moving average, suggesting that the near-term trend is positive. The volumes are a little thin for my comfort, but the price action is supreme. So as long as that is positive, I remain positive on Eternal. Take this as a positional bet. It's got rooms up until about 290 on the upside, and once that is taken out, 320 kind of levels also, and the 240, 245 zone, which was a strong resistance for a good part of this year, will start acting as a support. So good risk reward ratio, after this steady up move. So very positive on internal, at the current level.
Okay, all right. So positive with regard to where eternal is concerned. I wonder, Coach, within the Nifty Bank, we continue to see an outperformance within the PSU banks. The private banks are relatively muted, especially over the last couple of months. What's the sense like? Give us your perspective. And you know the heavyweights, they're going to be coming out with numbers this Saturday. So what's the trade like over the next 2 to 3 days with regard to private banks?
I was of a slightly different opinion. I thought the private banks were actually holding forth, doing well, while PSU banks, after that big run, came into a bit of profit booking. I still maintain that, if you want to play the bank nifty, then HDFC Bank and ICICI, are still the top bets that you have to make in this sector. Kotak is now turning a corner. It's had a good move, but every time it comes within that 2,000 to 2,100 range, see some profit booking. This time, despite the profit booking, it's trading comfortably above that mark. So I think this is a multi-year breakout, that could come about in Kotak. Some consolidation, some negative RSI divergences. So, some consolidation is understandable, but I would also consider, Kotak as a bet from a positional standpoint in the private banking space. I remain a little skeptical on the PSU names just because the rallies haven't seen follow through. You've seen the spark. You've seen a spark in, the SBIs and Canara banks of the world. But even now, if you see 820, 825 not being able to cross on an SBI, if you see a Canara bank about 115, 116 odd levels, still proving to be a bit of a resistance. So yes, I do have an eye on some of the PSU banks. Once they give this breakout, I think the second leg of this uptrend could very well emerge. That trend that started somewhere mid or late June. So once you get this breakout, you chase PSU banks. Up until then, HDFC, ICICI, and Kotak Bank, are your way to play banks.
Okay, so that's obviously the big debate, and it's raged in our newsroom as well, Neeraj. Whether PSU banks should be the pick of the pack, or is it the private banks which will benefit? And there's just so many moving parts with the 100 basis points repo rate cut. Actually, let's get better perspective. Let's go across. Aman Chauhan joining us, fund manager, Abacus Asset Manager LLP. Aman, let me start off with that. We were just speaking about PSU versus private bank. Give us your take in this environment, given the 100 bips rate cut, given everything that's playing out. What's your take? What will be the better performers from here on?
In the near term, I feel PSUs can outperform the private banks because private banks have already done well versus PSU banks. PSU banks are bigger beneficiary of the rate cuts, so that is also something which is good. Plus the valuation. So typically when there is an interest rate cycle and when financials perform or get re-rated, then PSU banks, which typically trade below book, tend to come towards the book level, the one kind of valuation. And that's where I feel that in the near term, PSUs can do better.
Okay. And Aman, how are you viewing markets at this point? Of course, there's everything that's playing out on the geopolitical side globally. But how is it that you're looking at things domestically? So give us that perspective, and how are you positioning for everything that's playing out?
Sure. So domestically, we are quite positive. We feel the worst is definitely behind us. This slow saw last year and for 25 is clearly behind us. And growth rate in the current year and the subsequent year should pick up versus what it was in 25. So domestically, we are quite positive on that front. And the reason for that is we feel the government has decisively acted in favor of doing whatever it can to spur up the demand. So we got your tax breaks in the budget, we had the rate cuts, we had the liquidity measures, plus government spending, which had seen a lull. Even the order activity has picked up if you see the monthly number of the last 4-5 months. So all in all this put together, definitely the growth rates are going to pick up. So domestically, I'm not worried. What I'm worried is what happened on the global front, where today the biggest worry is on the currency front. So while Trump would have thought that dollar will appreciate and that will help them negate some of the tariff issues, the fact is that dollar in fact has depreciated. So now based on that, what action the US government will take and what is the countervailing measures or you can say counter efforts other countries will make plus currencies, that's where I believe some volatility can come in over the next 2 to 3 months.
Aman, good afternoon. Neeraj here. You guys now have a hefty size, and therefore we interesting to understand whether you currently remain fully invested, or do you sit on a bit of cash, considering that there is a fair degree of uncertainty around tariffs and the impact thereof?
Sure. So we don't take cash calls. So even when it was super volatile in the month of January and Feb, we did not sell anything specifically just to create cash. Whatever we wanted to sell, we did that. As we speak, we would have, say, high single-digit cash levels at the AMC levels, but this is something that is waiting to get deployed. It's not that I've sold something and created its cash. The inflows that come in, we are gradually deploying that. So we are not overnight deploying the inflows that we get regularly, and that is what is the current cash levels that we have.
Got it. Okay, Aman, the other thing is with size, maybe it becomes imperative to, at the very least, perform in line with the market, and then of course outperform the market for sure. I'm trying to understand the 2 or 3 large sectors that we have. Are you aware within that? Are you meaningfully away from the benchmark weightages that might be there on the Nifty 100, for example, or the Nifty 250 as the case may be? So IT, banking, what have you. Are you meaningfully away in any of those spaces from the benchmark weightages?
Yeah. So caveat is that we don't do benchmark style of investing. So my portfolio is completely unbenchmarked. Based on that, I'm meaningfully away from the FMCG and the consumer space. It's too expensive. Great companies, great brands, but too expensive for us to invest, and hence we are not there. We are significantly away from the energy sector, especially the oil and gas, and that is something we are meaningfully away from the benchmark. We would be, in a way, underweight IT. We are, on the contrary, positive on pharma, so we are overweight there. Banking would be equal weight for us as we speak, but within banks also, we have more of NBFCs than banks. And then there's industrials where we are meaningfully overweight.
And Aman, what within this pack has been still looks attractive to you? Give us that perspective.
Financials still look good. Okay. For a long period of time, they were market or 2 underperformers. Last 6-8 months, they have done well. Just in the near term, maybe next 1 or 2 quarters, they might be market performers. They might not outperform, because whenever the rate cut happens, the first reaction in the first 1-2 quarters, there is a negative impact because things get repriced, and then the growth rate picks up, and then the business picks up. So maybe in the very near term, financials might be market performers, but then I expect them to outperform over a 1 to 2 year period. We are quite positive on pharma. Chemicals is one sector that is looking good, both base chemicals as well as specialty chemicals. Then EPC companies look good to us. The government tendering and order activities, so that is one segment that is looking good, where valuations also are pretty reasonable. Industrials is fine. That is also something that we are meaningfully overweight, and where we see earnings growth acceleration, and that's the reason that segment also still looks pretty attractive to us.
Aman, give me your take on IT. There's so much happening again. A couple of results have also trickled through, especially in large cap IT. What is your take with regard to the commentary? And give us perspective. One is the result plus commentary. The other one is valuations. Give us that whole perspective.
Broadly, if you see over the years, IT sector, at least the large companies, have got derated because the growth rate has slowed down just because of sheer size. It's not that these companies have stopped growing, but at $5 billion, $10 billion of revenues, it's difficult to keep on growing 10-20%. So now they're all growing in single digits, maybe low single digits, and that's what has derated these companies. So within the IT space, what we prefer is more of mid-cap IT or the large cap IT. For me, at the current juncture, it's a tactical trade if somebody wants to go long, because there is going to be tax cuts in US, and the IT spending there because of that can pick up. Once it picks up, the growth rate for Indian IT companies is bound to pick up. So whatever we are estimating, the street is today estimated is a 4 to 5% growth for the large company. That goes to 5 to 6%, you make 15-20% return. And that's broadly what the IT to me right now is. Bottoms up, yes, in the mid cap space or in the small cap IT space, there are lots of interesting companies that one can look at. But from a sectoral perspective, right now it's more of a tactical trade.
Aman, my final question to you would be around manufacturing, because while it's great to focus on manufacturing, it's a very wide sector, right? And you can play multiple verticals while we are playing manufacturing as a theme. So where is it that you find the highest comfort in terms of growth and a valuation combination in the manufacturing landscape?
In the manufacturing landscape, I think engineering and capital companies, they are well placed. The power sector is also witnessing heavy amount of investment. So companies in that space, wires, transformers, cables, that space is also pretty good. Valuation is slightly on the higher side, but the growth rates are pretty phenomenal in that segment. So these two segments within the manufacturing, the defense definitely is there. So that make in India and import substitute segment is there. And that is, to me, would be the most attractive from a growth perspective. Valuations are north of 50-60p. So maybe not the best of entry-level valuations, but from a growth perspective, defense manufacturing is the best, followed by, you can say, engineering, cap goods.
Okay, thank you so much, Aman, for coming in, speaking with us. Great conversation, great perspective as well on all things that Abacus is keeping their eye out on. But let's switch focus. High single-digit earnings growth is on the cards for FY26. This is according to Nilesh Shah, who is the managing director at Kotak Mahindra AMC. Listen to what else he had to say about earnings.
The R&D fund of 1 lakh crore, again executed well, could create growth opportunity through innovation. Put together, I believe there is pro-growth stance coming up in government and regulator policy. Monsoon has been good, macros have been stable, and there is a possibility of earnings upside. But as of today, we are waiting and watching the trend. We believe FY26 earnings growth for Nifty 50 is likely to be in high single digit. Mid-caps will deliver double-digit earnings growth.
Okay, so that's obviously the take coming in from Nilesh Shah. But before we slip into a short break, and it's that time of the show where we go into break, on the other side, of course, we'll have heard on the street, so stay with us. But before we head into break, Captain Shubhanshu Shukla of Axiom Mission 4 successfully undocked from the International Space Station on the 14th of July. That starts his return to Earth. After 18 days in space, he and his crew will splash down near San Diego around 3 p.m. today. The 22.5-hour trip aboard the SpaceX Dragon concludes a historic mission, returning over 580 pounds of scientific cargo from 60-plus experiments. Meanwhile, his family in Lucknow anxiously prepares for his homecoming, decorating their home and praying for a safe arrival. Filled with deep pride and deep emotion, I'm sure. You can see all of those pictures. But with a very short break, on the other side, Heard on the Street.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का माया जाल है। ऊपर से ये अलग फाइट, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Welcome back. Thanks for staying with us on India Market Close. Joined by Neeraj Tamanna, of course, but we'll also have that time of the show where we bring in Soumit Sarkar. He has the chatter from dealing rooms that he listens into. Soumit, do you listen in to a lot of those dealing rooms, or do you just make calls? Because it seems like you listen in.
Are you suggesting there's some surveillance system that Soumit Sarkar has?
Yes.
Or is that
I believe
Soumit a fly who is on the wall?
I believe so.
No, just calls that I make, nothing else. Well, yeah, in today's list, it's Adani Green firstly, which has been highlighted by multiple dealers. They're saying that there are good buy flows on the FI desk in trade. In fact, they're saying that a big FI who already owns a stake in Adani Green has been adding more shares in trade in this counter. Apart from that, it's PG Electroplast where dealers are indicating that there are buy flows on domestic institutional on DI desk. In fact, multiple mutual funds have been buying into this counter in trade today, and dealers are also indicating that the first quarter results could be strong for PG Electroplast. For Centrum Capital, there are buy flows on the back of a buzz of a potential fundraise announcement that could come in. For Hindalco, dealers are indicating that there are sell flows on institutional desks. Both foreign and domestic institutions have been selling this counter at higher levels in trades. Keep an eye out for Hindalco as well. For Oriental Hotels, dealers are indicating that there are buy flows on large HNI desk on anticipation of the merger announcement of with Indian Hotels. Now, Indian Hotels is the promoter company of Oriental Hotels and owns more than 28% stake in the company, and a merger is quite likely possible is what dealers are indicating in case of Oriental Hotels. And lastly, it's Gland Pharma, where large HNIs have been accumulating this counter in trade in anticipation of some positive announcements. So keep an eye out for Gland Pharma as well.
You know, Samit, if someone asks you how you do what you do, you should say magician doesn't reveal their tricks.
Well,
you should not entertain such questions coming in. Okay, I think part of the magic, thank you for that, Samit, part of the magic is really the turn in the mood in markets, and I wouldn't say decisively, but nevertheless, we are seeing some buzz coming in here. Kush Bora, of course, continues to be with us on the show. We're also joined by Vineet Bolinchkar, Head of Research at Ventura Securities. Vineet, very good afternoon to you. I want to come to you on what's happening with auto stocks and whether you're seeing any decisive shift here or a rotational play.
I think, the favor is coming back in terms of pure EV plays, and the kind of, numbers that Ola has put out and the encouraging commentary that they've given. I think the EV space is going to see a lot of buzz, and I think it's going to do really well over the coming few days. Ather Energy and Ola can do well from current levels.
Ola Electric, let me just talk about Ola Electric, and we'll pull up Ather as well. And this has been a matter of debate, I think, on whether Ola is turning the corner, numbers are encouraging, or this was previous inventory which is coming in. Today the stock retreating a bit after its buzz yesterday. Vineet, what's the view on an Ola Electric? Is this something that you're willing to stick your neck out and bet on?
So I think it's early days, but whatever commentary that they gave yesterday in the con call seems to be very positive. They're talking of turning EBITDA positive by Q4, building in about 20% CAGR growth in volumes over the next 2 years. And that seems very interesting. Also, there's a lid on CAPEX. And a lot of the parts which are of concern for the market, which is especially the rare earth metal magnets, they're going to manufacture from non-rare earth material internally. And all this, I think, should play out quite positively for the counter going ahead.
Okay. Kush, in fact, let me ask you the Ola question. You're seeing I think the overall space also buzzing today. Ola is the outlier, but if you look at an Ather, a Hero Moto, Anant Raj, not have bad, even in your auto Ank space, not doing badly at all. What would be your call on an Ola? Kush Bora, the question for you.
Sure. Tamanna, Ola has been on my avoid list for a very long time. Remains so even now, despite the kind of move that it had yesterday, giving up some of those gains. However, if I just look at it from a very objective standpoint, there is a mild positive divergence that did creep in about 2 to 3 sessions ago. We may have already seen the reaction to that yesterday. Whether we get a follow through or not, and whether we are able to close above yesterday's high, which was close to that 48 mark, that will decide the near-term trend for the stock. For now, if I did have a position, I would actually take this jump till about 48 and maybe even slightly higher levels as an opportunity to exit. No fresh entry is recommended in Ola.
No fresh entry in Ola. Some of the other spaces that are not doing too badly are, I would say, in the real estate. Look at a Sobha today, not too bad. DLF, is real estate something that deserves a relook, Kush? We've had good data coming in on inflation, the hopes that you will have interest rates that continue to be benign. Do you see pockets of possibilities there?
For sure. I think what we saw in real estate over the last week or so was more consolidation, more profit booking rather than anything else. The broader trend remains intact. However, if you see, not everything seems to be participating. So I would be selective. So I will stick to the stocks that I've discussed in the past. So DB Real Estate, Marathon Next Gen, some of these names after that mild dip are starting to do well. So I'll focus on these. Prestige was a call. It's seen some volatility and perhaps some profit booking from the high point of the day. But all in all, the volume accumulation on this one in the last 3 to 4 sessions has been very interesting. So yes, while I remain constructive on the sector, I would still be very picky, very choosy on some of the names that I mentioned.
Okay. Yep. And it pays to be picky for sure. Vineet, people who've been picky enough in buying into or investing into select pharma names, particularly on the API CDMO side, have reaped some great benefits, right, the last few days. I mean, Newland, a case in point, the last couple of days, Laurus, the last few days, Divi's, the recovery that we've seen. Are their valuations now prohibitive, or could they still give returns? And why so, if yes?
So, the few stocks that you mentioned, Laurus Labs really stands out for me. If you see the numbers in June, they are very, very strong, and they're keeping pace with what Divi's does. So I think that growth metric that they did in terms of CDMO exports is very strong. And I think that the party has only got started in Laurus Labs.
Okay. Laurus Labs in focus. What about Sun Pharma, Vineet? Big news on Sun Pharma. Oro Pharma also has positive news for a new drug. AstraZeneca, all of them actually buzzing with good news coming in today.
Yeah, but we are more focused on the CDMO space, and we feel that the CDMO phase will outperform the overall pharma pack completely.
Okay. All right, just stay on with us. We were talking about Hero MotoCorp. Hero MotoCorp, truly the stock of the day. India's largest two-wheeler maker is gearing up for a major push into developed markets. In their annual report, they've announced plans to enter several key European countries in the coming months. That's why you're seeing that excitement on Hero Moto. Anushi is joining in with more details.
Well, thanks for that, Tamanna. So, as you just specified about Hero MotoCorp and its strategy for FY26, this is an interesting one that we are looking at, especially considering that it plans to enter in European markets. Now, what it plans to enter is in Germany, France, Spain and UK. And this is in the second quarter of FY26 that we are looking at. Expansion will be led by its EV brand, which is Vida. So, that would remain in focus. Along with that, what we are seeing is its product launch goals as well. Now, first product to be Vida, and this is the electric scooter that we are looking at. It plans motorcycles for these European markets that we are seeing. So FY26 in terms of how the international business performance is something that we should be watching out for. Now the distributors for this have been set in Italy, Spain, France and UK is what we are looking at. So that is an interesting one. With this, if you look at the portfolio goals that they've set for the year, they target 10 EV models by FY26 end. So that is what we are watching out for. Other than that, this includes 6 Vida models. Along with that, 4 with zero motorcycles is what we are seeing as well. In terms of how the outlook is considered for the European markets, now they are increasing their expenditure there by major European countries. They are increasing their expenditure, and this will lead to the medium to long-term growth for the company as well going forwards. Currently, if you look at its presence, they operate in 48 countries, and FY26, if we just see the kind of international growth that they've posted, it was in 43% is what the range that we were looking at. South Asia, Latin America was some of these regions wherein this led to the international growth that we are looking at. If you look at the share of international revenue, that stood at 5.7%. So from here on, how FY26 would pan out for the company is something that we should be watching out for. Now on to the analyst recommendation on this stock, we have 23 buy calls on this one, 12 hold and 7 sell. So it's a mixed picture that we are seeing, which cumulatively adds to an upside potential of 3.3%. So FY26 a focal point for Hero MotoCorp going forward.
Okay, thank you for that, Anushi, for breaking that down for us. Hero MotoCorp certainly in focus, top gainer on the Nifty 50 today. Vineet, how do you view Hero at this point? The consensus on the street seems to suggest just a 3% upside. Clearly, you would want more. Are you seeing that?
In which stock are you talking about?
Hero Moto.
Oh yeah, so I think the Hero Moto has seen a shift in strategy. They're expanding very well in the higher CC motors, and with their growth plans that are there. I think this stock is on verge of rediscovering its mojo, and I won't be surprised if this stock is trading at 5,000 plus in the very short run.
Kush, how are you viewing this on charts? 4%, strong move.
Harsh, this is a very, very interesting move from a technical viewpoint. This is a very exciting move, and I'll give you a couple of reasons for that. Rather 8 weeks of consolidation, you're seeing a breakout above that. just the move that it's made today has actually taken on the 50, the 20, and the 200-day moving average on the trot. 43.75 resistance level taken out. 38% retracement resistance is what it's hitting right now. Now everything going for it. The Akhri Padav, the last leg of resistance, if I can call it that, is 44.75, which has been the high for the last 2 months. If that is taken out in this momentum, I will not be surprised, as Vineet said, see the stock move to 4,800 levels and 5,050 levels. So it's a very interesting setup, very interesting chart. The risk reward ratio is very favorable. If you have, you should hold. If not, you could make a slightly preemptive trade, considering that the 44.75 mark will be taken out. So 4,200 is your stop loss. But on the upside, you're getting an uptick of about 600 odd points. So 1:3 risk reward ratio. I would make a positional bet on Hero MotoCorp.
Okay. Anything else apart from Hero that you would look at? Vineet talked some time ago about the EV play coming in. Kush, you said Ola you don't want to talk about, but in terms of the four-wheelers, M&M, Tata Motors, any of those that you find interesting, or other two-wheeler plays on your radar?
Each category. M&M definitely makes the cut. Maruti just keeps facing resistance, and Tata Motors has no momentum at all. But if you see Mahindra and Mahindra, good signs of accumulation, very clear stop loss around the 29.75, 3,000 mark. Mild resistance is around the 3,200 mark. If that is taken out, you will see an upswing, and perhaps it's a matter of time before that level is taken out and the stock moves higher. So make a positional bet on Mahindra and Mahindra, matter of time before it breaks out. Likewise is the case for TVS Motors. TVS Motors on the downside, 2650, 2700, give some grace, and in that zone, you've got a good support zone for the last 2.5 months. On the upside, 2900 acting as a mild resistance, and beyond that, you're looking at a 3200, 3450 kind of move as well. So while the momentum is not there with the sector, I think this consolidation that you're seeing for the last few months, about 6 to 8 weeks, depending on which stock we consider, this is actually a very healthy sign. So I would actually make a positional bet in Mahindra and Mahindra and TVS Motor, and now, as we just discussed, Hero Motor as well.
Time to talk about some buzzing stocks on the back of earnings. Tejas Networks, Rallis India and Swaraj Engines in focus. Let's bring in Jasmeet to talk through some of these earnings report cards as well. And Jasmeet, well, Tejas is certainly sulking, but there are others which are buzzing as well.
Well, right. Thank you for that. Yes, Tejas stock is sulking on the account of the earnings, while we see the company reported the lowest ever quarterly results in last 2 financial years. While what the company says is the lower revenue was the account of lower order wins, like the slower purchase order came in for the company. While company's order book stands at 1200 odd crores, let's dive in the financials to get more understanding of what exactly happened with the company. When you look at the revenue, it's down 87%, while even the EBITDA is reported to be a loss of 135 odd crores, and there's a net loss of 193 crores versus that of 77 crores profit in the previous quarter. While the next one on my list, which the stock is buzzing, is Swaraj Engines. While the stock is up 5% in trade today on the account of earnings, let's understand the key highlights about the earnings. Firstly, the company reports this highest ever PBT of the year, where they say it's a 67.17 crores, while the company also says it's a strong growth demand when it comes to demand for the engines, while the Q1 engines have grown by 17 odd percentage and stands at 49,000 odd units. When we look at the financials, the revenue stands at 15.8%, which is an uptick from 488 crores, while even the EBITDA is up 15.4%, while the margins are at 13.86, almost muted compared to the last time, while the net profits are reported 16% uptick. While the last stock on my radar is Rallis India. We also spoke to the management recently, while what the company says is the revenue growth was led by strong volume across crop care, seeds, soils and plant health segments, while the soil and plant segment reported a 33% growth YOY, while they also launched 9 new crop protection units and 14 new seed products. While when you look at the financials, the revenue is up 22%, while the EBITDA is up 56%, and the margins are at 15.7%, which is again improved compared to 12.3% in the last quarter, while the net profit is up 98% for the company. While as I spoke to the management, here is what the management says about the EBITDA guidance going forward. Listen in.
The kind of segments we operate, 15 to 20% is a typical EBITDA margin. And on long-term basis, that's where we want to move forward. Now, quarter to quarter, because products mix will change. Some quarters export will be higher, some quarters seed will be higher, some quarters crop care will be higher. So that will keep going up and down. But long-term basis, yes, we want to be in the industry benchmark rather than trailing behind the industry.
Rallis showing good numbers there and being rewarded accordingly. You know, quite a few numbers that are remaining to come. Vineet Bulinshkar, I want to come to you on this. HDB, one of them, a lot of insurance companies that are on radar today. What are you keeping on your watch list in terms of results for this season and in the next couple of days? I think you're on mute, Vineet.
So like Rallis, I think, you know, the agrochemical industry is on the verge of a turnaround because we've seen massive price erosion because of Chinese players over the last few years. But, you know, I think that is coming to an end. It's like the tailwinds are just setting up. And I think Rallis is a trailer of what is going to happen in this industry over the next few quarters. I think just like we've seen the CDMO industry turn around and display handsome numbers, all these stocks are going to do well. So few stocks on radar are Coromandel, Rallis, and you know you can look at the out of factor play called Hiramba. It has got its plant is operational, just become completely operational, and we can see good volume growth coming from there.
Okay, Coromandel looking good, Hiranba, okay, quite a few stocks over there that you're spotting. Kush, let me come to you on the question on Rallis. On charts, do you think there is an upward potential here? What would you do if you held it?
I would continue to hold with a stop loss near the 355-360 zone. Now, the reason I say that is because this has come up to a multi-year resistance or rather multi-month resistance of 375-380. Even today, if you see the high that the stock has made, you know, it's close to that level, but it's not they've been able to hold on. So expect some supply pressure near 375-380 zone. If and when it does get a closing above that, I think, you know, fresh up move could start, you know, towards 400, 415 mark also. But right now, from a near-term perspective, the trade is done. So no fresh entries recommended, but extremely strong momentum, knocking on the doors of, you know, a multi-month resistance level. So continue holding on 355 about, or 350, 355. Those levels that should act as your stop loss or trailing stop loss, as the case may be.
That's come off despite good results. But I'll tell you what's gone up. Waaree Renewable Technologies, that stock was up in trade, has zoomed higher, is now up about what, 17%. No, not Rallis. Waaree Renewable Technologies, if we can pull that one up. It was up 11-12% at the time when we started the show, and now is up a whole 17%. So really strong show for this one. You know, I mean, some interesting movers there. And I think companies in this whole EPC space, like we were talking about this yesterday or today, Tamanna, right? In the morning, that the solar and the wind additions that have happened in April, May, June have been stellar. I think the solar additions have been to the tune of 189% YOY growth at 106 gigawatts or 10,000 megawatts that have been added.
You think this is a domestic solar capacity play that you're seeing in Waaree, or is it because a lot of the downtick, if you remember, was a US-based issue, kind of a reaction?
For Waaree Renewable, yes. Waaree Energies, yes. But since this is entirely the EPC arm, I don't have an exact handle on how much work do they do outside India. But certainly in India, Waaree Renewable Technologies does a lot of EPC for the Indian players. And if solar addition has been very strong, one would presume that Waaree Technologies would have had a decent order book to play around with or decent work done. Looking forward to the results for sure. I don't know, I'm not saying that would be good, but I'm presuming I'm putting two and two together here.
Yeah, okay, so Waaree too. Some standout, you know, pop up in stocks today after the very flat kind of an opening in first half we've had. We've had at least some action through the day, which has been good, and some real buzzers. One of them perhaps is Sun Pharma, and I just want to pull up Sun Pharma today, and you know, it's something that we've been watching very clearly. So just the settlement of a dispute is what is the reason that the stock is up today on one of their alopecia drugs, which was a bit of a hindrance, a roadblock. But is it a complete out-and-out bear case for Sun Pharma, or is there a bull case for Sun Pharma, or is there a downside as well with the bear case? The bull versus bear segment now, we're going across to Varsha to dissect Sun Pharma.
Thank you for that. So yes, the rally that you're seeing in Sun Pharma today is because of the patent settlement of their hair loss drug, that is Leqselvi, in the US. Now they have launched this drug in the US after, now this is achieving this earlier than expected launch following the patent dispute settlement with one of the pharma companies. Now, but you know, this is true, but even Sun Pharma has given a very soft guidance when it comes to FY26. So they are guiding for a mid to high single digit top line growth guidance for FY26, suggesting potential broader challenges across the business despite the new launches that the company has been eyeing into. But Morgan Stanley maintains an overweight and is bullish on Sun Pharma considering this Leqselvi product, because they are forecasting significant Leqselvi sales of around $61 million for FY26 and $83 million for FY27, and even till FY30 this can become a significant contributor when it comes to Sun Pharma. But one of the issues that the company is facing is their Halol plant, if you see, which is under import alert, and recently they got the 8 observations which came out. There was repeat observations which the company has seen, and because of that there may be a case wherein this Halol plant will be under import alert. So this is one of the constraint or one of the disadvantages that the company has, and the street may not like it once the data comes out. But they are strategically planning for future product launches when it comes to high growth areas like diabetes and weight management, backed by internal R&D, acquisitions and licensing. We all know the hook around when it comes to diabetes and the weight management products. All the pharma companies are going into it, and Sun Pharma is actually launching their own product under specialty segment when it comes to your diabetes or weight loss segment, which will be the next growth driver, because specialty portfolio is what Sun Pharma is betting on, and Leqselvi is under specialty portfolio, just to remember that. But lastly, if you see, competition is what will be a challenging when it comes to Sun Pharma, because of the diabetes and the weight management that the company is going into will attract a lot of competitors. But overall, if you see a good growth ahead when it comes to long term, but your short term company may find pressure when it comes to launches.
Okay, so that's with regard to Sun Pharma. Let me come to you, Vineet. Firstly, thank you, Varsha, for that perspective. But Vineet, what's your take on Sun Pharma? Do you like it? If so, why? Also, if not, give us a couple of your top picks within pharma and why.
So I think just earlier in the program, I told you that the CDMO is a very sweet spot, and growth is going to be high teens. Cash flow generation, margin expansion is very, very strong. So we prefer those plays. So we like OneSource, we like Laurus Labs, and these two remain our top picks in the pharma sector.
Vineet, I wanted to ask that to you, but at 140 times trailing 12 months PE, even if Laurus were to grow at 100%, right, it is trading at 70 times. That's not cheap, right?
I think the potential and the capacities of and the capabilities of Laurus Labs are absolutely underappreciated. They are future ready, they are production ready, and they are one of the largest plants in the country today, to take on. So I think outside of China, if there's anyone who can do manufacturing at scale, I think it's Laurus Labs. So very bullish on this.
Wow. Okay. Fair call. Okay. We'll take a quick break. On the other side, we'll get you the buy today, sell tomorrow ideas as well, and take some chart checks with Kush Bora as well.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IDFC for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
The big moment is here, splashdown. That's what you're seeing in less than a minute or so. We should get that countdown clock up as well. Captain Subhanshu Shukla of Axiom Mission 4 successfully undocked from the International Space Station on July 14th, and that journey now continues. Here's what's expected to happen at 3:01. So in a minute or so from now, you will see a splashdown in the Pacific Ocean off the coast of San Diego. That's what we're hoping to see as they enter the Earth's atmosphere. Apurva Jakhari is joining us, NASA Honeywell Space Educator. Ms. Apurva, thank you so much. You know, for the uninitiated, can you just explain to us what is happening right now? Where are we in the return journey, or what phase are we in the return journey for Subhanshu Shukla?
Definitely, it's a very few minutes. We are all waiting for the splashdown to happen in the Pacific Ocean. And in any few minutes from now, we'll be hoping to see the crew will be, splashed into the ocean, and we'll see their safe return to the Earth. And definitely, this is a very historic moment for all of us, because Group Captain Subhanshu Shukla is the first astronaut of Indian origin who is a part of this particular mission.
That's the hit. That's the moment that we're seeing right now, where he hits the water. And you can see his parents. If you pull up those visuals, you'll get visuals of his parents there waiting in the viewing dock, actually seeing this return back to earth. Just explain to us what exactly